Yes, students, in this video, let us discuss January 2026 costing question paper. I have gone through the complete question paper and I felt it was quite easy and we need to give full marks for ICAI for drafting the questions really well. And MCQ part especially were very easy, but coming to the descriptive type, 2 to 3 questions are really challenging. And if you are a student who has written January 2026 exams, just let me know how did you feel about the question paper. Let us begin the discussion with multiple choice questions first, guys. Yes, first 2 questions would be the case scenario questions, which will have 5 multiple choice questions of 2 marks each. So, totally 10 marks for each case scenario, guys. Yes, but what I would suggest you is when you're reading the case scenario question, first go read the requirements and quickly come back to the case. Yes. What is the combined contribution to sales ratio at the existing sales level? Okay. Don't read the option, just read the questions. What is the total profit at the existing sales level? Okay. What is the new contribution to sales ratio in the proposed situation with product W? What is the break-even sales at the level of proposed sales mix with product W? What is the total profit at the level of proposed sales mix with product W? Okay. Guys, don't waste your time reading the options because don't know the data given in the question. Yes, I just want you guys to read the requirements and then come and read the case so that when you're reading the case, you will already know what you're supposed to calculate. From the given questions, I can understand that there are two sales level. One is the existing one, the other one is the proposed one. Okay, fine. Let us decode the information given in the case. Z Manufacturing Limited produces 3 different types of specialized products, namely X, Y, and Z. The following information has been collected from their books of accounts for the year ended March 2025. Okay. So for all the 3 products, sales in rupees is given, selling price per unit is given, variable cost per unit, guys. So from this information, can we calculate the contribution per unit? Yes. If you just deduct variable cost per unit from selling price per unit, you will get contribution per unit. Yes. And we can also calculate sales in units. If you just multiply sales in rupees by selling price, you will get the sales in units, guys. Okay. Then the total fixed cost of all the 3 products put together, we can call it as common fixed cost, which is 18 lakh. Okay. Next, Z Manufacturing Limited is currently discussing the proposals to maintain a sales mix ratio to discontinue the manufacturing of product Z and replace it with a new product W. Okay. In anticipation of the following results. So this is the proposed. Okay, guys. Proposed sales level. So instead of product Z, they are introducing product W. So if they introduce product W, then product Z will not be produced, guys, or it will not be sold. Okay. Sales mix ratio is given in percentage. Selling price per unit in rupees. Variable cost per unit in rupees is given. Here also we can determine contribution per unit. Then total fixed cost 18 lakh 80,000. Then total sales 85 lakh is given. Guys, you can see here total sales is given in rupees here, whereas percentage sales mix is given here. Can we apply this percentage and calculate the sales of each product? Yes. So what is the sales of product X? It will be 85 lakh into 55%. For product Y, 85 lakh into 30%. Same way for product W, it would be 15%. Okay. Based on the above, you are required to calculate the following MCQ 1 to 5. Okay. First, for existing level, what are we supposed to calculate, guys? Combined contribution to sales ratio, which is nothing but PV ratio, contribution by sales. Okay, as it is combined, so we need to know that the formula would be total contribution divided by total sales into 100, guys, for all 3 products put together. Okay, sir. Next, what is the total profit of the existing sales level? So what I can understand, guys, for the first 2 questions, you will get the answer from this information for the first 2 questions. Whereas for the remaining 3 questions, the data is here. Easy, yes. So I have done a working for this so that it would be helpful for you guys to better understand how to solve. Yeah. So this is the income statement for X, Y, and Z, which is existing. And guys, in the exam, sir, should we present it so well? No, no, no. For multiple choice question, you did not prove your answers. You can just try to get the answer as early as possible. So you can also do the rough working, but for better understanding of the students, I've just done it here. And if you guys want, once I am done with the explanation, you can just pause the video and take down this. If at all, if you want to make a note of it. Got it? Yes. So chalo. For all the products at existing level, guys, that is X, Y, and Z, selling price and variable cost per unit is given. So let us calculate contribution per unit. Okay, done, sir. Then sales in rupees is given. Can we calculate the sales in units? Yes. Sales in rupees divided by selling price per unit. You can see here, I have done A by B. A by B. We will get number of units sold. Hope you understood. Sales in rupees divided by selling price. We will get how many units of X, Y, and Z is sold. Okay, sir. Okay. Once we get the units, just multiply that with contribution per unit. You'll get total contribution. I repeat, once you get sales in units, multiply that with contribution per unit, you will get total contribution. For X, it is 20 lakh. For Y, it is 9 lakh 52,000. And for Z, it is 6 lakh 48,000. So the total contribution is 36 lakh. From that, deduct the total fixed cost, you will get profit. One of the requirement in the question is to calculate the profit at the existing sales level. We have got it. Then they have also asked combined contribution to sales ratio. Let us do it. Contribution by sales into 100. Please take the total figures. They didn't ask it individually for each product. They asked only total. That is combined. Okay. So contribution is 36 lakh divided by sales 80 lakh into 100, guys. So we derive 45%. 45%. Is that clear? If you want, you guys also can work it out. I already worked it out and I have presented you. So I'm just explaining it. Okay. So these are the two information which is asked in the question. 18 lakh and 45%. Yes, guys. So we have got it. I will just mark it in blue. What is the combined contribution to sales is 45%. So that is option D. Next, what is the total profit at existing sales level? It was 18 lakh, right? Yes, 18 lakh. 18 lakh. That is A. Got it? Yes, sir. Now coming to 3, 4, and 5. What is the new contribution to sales ratio in the proposed situation? That is with product W. They didn't ask, please be careful. They didn't ask only for product W. They asked for entire company with product W. Means this is also total, guys, combined. Got it? Yes. Then break-even sales at the proposed level and total profit they have asked. Okay. Let us do the similar calculation even for proposed level, guys. Income statement. X, Y will be common, whereas W is the new product. Please be careful. The selling price and variable cost is given you. Take accordingly. Okay, so selling price minus variable cost will give us contribution per unit. Then sales in rupees total is given, guys, 85 lakh. Divided between X, Y, and W in what ratio? 55 is to 30 is to 15 ratio. It is given in the question. Sales mix. Sales mix is given. Okay. So just divide this 85 lakh in this ratio between X, Y, and W. Okay. So we'll get individually the sales of X, Y, and W. 46 lakh 75,000, 25 lakh 50,000, 12 lakh 75,000. Yes, sir. Then sales in units. Just divide the sales in rupees by selling price per unit. You will get sales in units. You will get sales in units, guys. Okay, sir. Now, once we have got sales in units, multiply that with contribution per unit. You will get total contribution. Similar to what we did already for the existing sales level, guys. Got it? Yes. Only one thing you have to take care here is sales calculation. Individually, it is not given, but total is given. Sales mix is given. Just multiply both. You will get the sales of each product. Rest all similar calculation. Okay, once we get total contribution for all the three products, 39 lakh 95,000, reduce the fixed cost. Please be careful. The proposed fixed cost is different, 18 lakh 80,000 after introduction of product W. Okay, reduce that. You will get the profit. Then they have asked PV ratio, total contribution divided by total sales into 100 lakhs. PV ratio. Yes, they have also asked for the proposed level break-even sales. What is the formula to calculate break-even sales? Fixed cost divided by PV ratio. Divided by PV ratio. Fixed cost is 18 lakh 80,000 divided by PV ratio 47%, guys. Do it. You will get 40 lakh. I repeat, fixed cost is 18 lakh 80,000 divided by 47%. You will get 40 lakh. 40 lakh. Yes, sir. Sure. We'll just mark the answers. What is the new contribution to sales ratio, which is nothing but PV ratio, people? We got 47%, right? Yes. Then what is the break-even sales? 40 lakh. Then profit was 21 lakh 15,000. 21 lakh 15,000. Got it? Yes, sir. 10 marks is in our pocket now. Yeah. Case scenario 2. See guys, there are two ways to read the case. I have already told this number of times, but I'm just repeating once again. See, you can read the case, then read the requirements or the questions, then accordingly start answering one by one. Or the other one is which we followed for case scenario 1. First you will go read only the question part. Don't read the option. Just read the question. You will understand, oh, what am I supposed to calculate? Then go and read the case. So that when you're reading the case, you will know what you are supposed to calculate. You just try it out in both the ways, whichever you feel more comfortable. You please follow that in the exams, guys. Is that clear? Yes, sir. First, okay, I will just go read the requirement. What is the annual demand for raw material OC and OE? So what I can understand is these two are raw materials. Okay. What is the economic order quantity in kgs for raw material OE required by Spice God Limited? What is the formula to calculate EOQ? Square root of 2 into annual demand into ordering cost per order, the whole divided by carrying cost per unit per annum. Yes, sir. EOQ. Next, what is the economic order quantity in kgs for raw material OC required by Spice Guard Limited and number of orders to be placed in a year? Okay. EOQ. Here they have asked only EOQ for this raw material, whereas here they are asking EOQ along with number of orders. Number of orders. So simple. Annual demand divided by EOQ, which is nothing but the lot size, will give us number of orders. Okay, sir. Ninth one. What is the total annual cost of raw material OC at economic order quantity level? So total annual cost is asked, guys, which should include even purchase price. Purchase price, total carrying cost, total ordering cost. Okay. Last one. What is the total amount, total annual cost of OC if the company proposes to keep an order size of 200 kgs of OC per order? Okay, lot size. If lot size is EOQ, then what is the cost? They have asked here. If lot size is 200, then what is the total cost? They have asked the last case. Got it? Yes. So why I will tell the students to read the requirement first and then go and read the case? See, sometimes it may happen like that. For example, sir, after reading the question, I understood this topic I don't know only, or these questions I don't know. Then you need not waste the time reading the question. Okay, this is very rare case. I don't want any student to miss out on any questions, but I'm just telling you because some topics student might not know or some questions student might not know. So if that is the case, then what you do? Once reading the questions, if you understand, oh, this question is little tough for me, I cannot easily manage it, better go to the next questions. Maybe you can come and attend this question at the end. Got it? That is one way or reason. The other one is when you have read the question already, and after that, if you are reading the case, you already know what you are supposed to calculate. And as and when you read the data, already your mind will be thinking about the answer. What am I supposed to do with this? What am I supposed to do with that? All this you will already be start thinking about it, guys. Okay, chalo, we'll move forward. Case 2. And if you ask me, sir, should I answer first case scenario question in the exam or the independent multiple choice questions? Guys, I would suggest you because case scenario questions might take little more time. So if possible, you can start with the independent questions. There will be independent questions also under multiple choice. You can start with that and then you finish it, then come back to case scenario. You can do that. No, sir, I would be more comfortable in case scenario only means that is your choice. Okay, let us continue. Spice Guard Limited manufactures pepper spray that is used by women for their self-defense. Boys, be careful. Ah, yes, we know that our boys will not do anything which will make the girls to use this pepper spray. Yeah, but anyway, as per the estimate, there will be an average quarterly total market demand of 3,125 units of pepper spray. Guys, please be careful. This is the total market size of what? Pepper spray. But they are given quarterly. So what should I do to calculate annually? 3125 into 4. That will give us annual total market for what? Pepper spray. Spice Guard Limited is expected to have 8% market share of the total market demand of pepper spray. Okay, for the company, what is the market size? So total market size is, or total market is 3125 into 4. In that, company has how much share? 8%. Got it? Yes, sir. The company produces the pepper spray using two raw materials, OC and OE. Each unit of pepper spray requires 4 kgs of OC and 1.6 kgs of OE. Okay, sir. Fine. So this is the raw material requirement. See, one thing you have to first understand that pepper spray is an output. For that, we require two raw material, OC and OE. And whatever EOQ or total annual cost and all we have to calculate is for what? Raw materials, guys. Okay. Ordering cost per order is given for both the raw materials. Then storage rate, interest rate, obsolescence rate. Guys, all this is carrying cost per unit per annum. When it is given in percentage, what should we do? Multiply with raw material price. Multiply with raw material price. So here it would be 5 plus 13, 18, 20. So 20% into 2000 per kg will give you carrying cost per unit per annum. Okay. Coming to this product. So one is in rupees, one is in percentage. So please be careful. 2.5 per kg per month means we need to multiply this with 12. Whereas here 1.25% per quarter. Okay, first multiply this with 4. Then apply this on the purchase price. So please be careful. We need to add both of them at the end. One is in rupees, one is in percentage. Should we add both? Yes, which will give carrying cost per unit per annum. This has to be multiplied with 12. This has to be multiplied with 4. And this percentage, whatever we get, we need to multiply with the price. That is the purchase price of raw material, guys. Okay, sir. Okay. Then on the basis of above case scenario, you are required to answer the following one by one. Annual demand, EOQ for both OE. No, only OE. Year. Okay. Then here EOQ and number of orders for OC. Then total annual cost for OC at EOQ level and total annual cost of OC if the lot size is 200. Fine, sir. We will try to work it out. Even for this, I have done some working. Total market demand for the product is 3,125 per quarter into 4 quarters. So for a year, 12,500. In that, the market share of the company is 8%, which comes to 1,000, guys. 1,000. Yes, sir. So 1,000 is the annual demand of the output, not input, of output for the company. For that, how much raw material we require, people? For each kg of, for each unit of pepper spray, we require, where is the annual requirement? Here. Okay, we require 4 kg of OC, correct? And 1.6 kg of OE. Multiply. 1,000 into 4 will give us 4,000. Then 1,000 into 1.6 will give it 1,600. Where is it given so? Here, guys, just a minute. I will show you. Yeah. Each unit of output requires 4 kgs of OC and 1.6 kgs of OE. So if you just multiply 1000 with 4, we will get annual requirement of OC, and 1000 into 1.6, we will get annual requirement of OE. So 4000 and 1600, guys. 4000 and 1600. So the answer is B. Oh. Next, we are supposed to calculate EOQ. Let us do that. But for calculating EOQ, we need some information, especially carrying cost per unit per annum. Okay. So first, raw material purchase price 2,000 and 200 is given in the question. Okay. Then carrying cost per unit per annum, guys, 20%. If I just add up all these three, I already mentioned about it. If I just add up all these three, we will get 20%. So 20% apply it on 2,000, you will get 400. You will get 400. I have denoted by CC. That is nothing but carrying cost. Okay, sir. Here, OE, it is 5%. How did we get 5%, sir? 1.25% is per quarter. So into 4 you do. Into 4 you do. You will get 5%. So 5% has to be taken on 200 plus 2.5 into 12. 2.5 into 12, guys. Is that clear? I repeat, 5% into 200 plus 2.5 is per month. So 2.5 into 12. So you add up both, you will get 40 rupees. So 40 rupees is the carrying cost per unit per annum for OE, guys. Please be careful. There are two components. One is given in percentage, one is given in rupees. You need to add up both. Take the aggregate of both. Oh. Then ordering cost per order is given in the question itself. I am denoting it by O. Annual requirement, I already explained how to determine it. Okay. Now let us calculate EOQ. What is the formula to calculate EOQ, guys? I already told you. Square root of 2 into annual demand into ordering cost per order whole divided by carrying cost per unit per annum. And if carrying cost is not given per annum, please convert it. That is what we have done here, especially here. Okay. Yes, sir. So you calculate, you will get for OC 250 kgs, whereas for OE 200 kgs. OC and OE 250 and 200. For one of the raw material, they have asked even for OC. Okay, for OC, let us just mark first 250 kgs. Okay, sir. 250 kgs. Sorry, OE. First, they have asked for OE. OE, it is 200 kgs. Yes, sir. 200 kgs. Please be careful with the names, guys. Here it is OE. Then for OC, they have asked EOQ as well as number of orders. Okay. OC, EOQ as well as number of orders. How did we get number of orders? Simple. Annual demand divided by EOQ, which is nothing but lot size. So 4000 divided by 250, you will get 16. And for OE, they have not asked, but I have just shown it. If they have not asked, then you need not calculate it. Okay. So 250 and 16, guys. 250 and 16 is the answer. Yes, B. Hope you guys got it. Got it? Yes, sir. Next, total annual cost. At two levels they have asked. Total annual cost of OC itself, they have not asked for OE, but for OC first they have asked at EOQ level. So what would be the lot size at EOQ level? EOQ itself, that is 250. What is the total purchased cost, guys? Please be careful. Annual cost includes purchase cost, carrying cost plus ordering cost. All three you have to take aggregate. Yes. So what should we do? Annual demand into material purchase price. So 4000 into 2000, you will get 80 lakh. Take it. Then total carrying cost of into lot size. Lot size is 250 into carrying cost per unit per annum, which we got it here 400. So you will get 50,000. And you already know that at EOQ, total carrying cost equal to total ordering cost. So you need not even calculate this. Just keep 50,000. Or if you want to ensure that whatever you are calculating is correct, you can do it. Clear. You can save time here without calculating this. You can straight away write 50,000 because at EOQ, total ordering cost and total carrying cost will be equal, guys. So, okay, sir. So if I'm calculating it by formula, what is the formula? Annual demand, which is 4,000 divided by lot size, which is 250. You will get number of orders, which is 16 into ordering cost per order, 3125. Or else, as we already have number of orders, you can straight away multiply with ordering cost per order, 3125. That is 16 into 3125. You will get 50,000. Okay, sir. So at TOQ, the total cost is 81 lakh. 81 lakh. 81 lakh. Please be careful here. They have just interchanged the position here. A is there, after that C is there, then B, then D. But anyway, you go with amount. You go with whatever amount we have got, just mark it. Oh. Next, they have asked, what is the total annual cost of OC only again? But if the company proposes to keep the order size as 200 and they have given only this much, sir, is there any change in the price and all? No, guys. When question is silent, you don't assume that there is a change in price, because normally when company is offered to buy larger quantity, they will be given a discount for the purchase price. But here actually EOQ is 250, whereas they're trying to keep the order size as 200. So less than EOQ actually. So obviously they will not get any discount, but still, as question is silent, don't consider any change in the price, guys. Go with the same. Only the lot size will change. That's all. Oh, so the lot size here with the proposed plan is 200, guys. So the purchase price will remain same, 80 lakh. Whereas total carrying cost of into lot size 200 into carrying cost per unit per annum 400. You will get 40,000. Then ordering cost will definitely increase because the number of orders will be more, no? because you are ordering only 200 quantities at a time now. Okay. So what will be the ordering cost, sir? A, that is annual demand, which is 4,000. 4,000 divided by lot size 200 into ordering cost per order 3125. 3125. Yes, sir. We will get 62,500. So the total annual cost is 81 lakh 2,500, guys. 81 lakh 2,500. Got it? And please be careful, guys. Students here might commit a mistake with respect to, sir, here they have asked OC. So they will understand that, oh, the next one is for OE. No, both are asked for OC. Please be careful. But the quantities are different. Here it is at EOQ level, which is, I guess, 250, whereas here it is at a different lot size. And obviously, if company is following any quantity other than EOQ, you should know that your total cost will increase. So there itself, you should understand what you are doing is correct. Got it? Yes. If company is purchasing at any level other than EOQ, whether it is less quantity or more quantity, if there is no change in the purchase price, then obviously the total cost will increase, guys. Total cost will increase. But we would have also done the questions in the class telling if company is purchasing 1000 units at a time, 500 units at a time, then the supplier will give a discount. Guys, this question is not on such discount calculations. Please be careful. For 200 lot size, there is no change in the price. Please be careful with that. Okay. And if at all, if there is any change, obviously they have to mention it in the question, guys. Okay, chalo. We are done with 10 questions. Next, let us continue with the 11th one. From 11th, it is independent questions, guys. A company's wage budget for the last month was based on the standard production time of 30 minutes per unit. 30 minutes per unit means in an hour, you can produce 2 units. And a standard wage rate of 50 rupees per hour. Okay. During the last month, it produced 30,000 units, actual output, guys. The labor rate variance was 7,500 adverse. Okay, negative. And labor efficiency variance was nil. Guys, here itself you should get a clue. First take, listen here. Sir, actual output is 30,000 units. So to produce this 30,000 units, what is the hours I was supposed to take? Standard hours for actual output. 30 minutes for each unit. Yes, sir. So 30 minutes, can I take it as 0.5 hour? Half hour, I mean half an hour. Yes, sir. So 30,000 into 0.5 to produce actual output of 30,000 units. Standard hours which was supposed to be taken was 15,000 hours. And here you observe they're telling efficiency variance is nil. Guys, what is the formula to calculate efficiency variance? Standard hours for actual output minus actual hours worked into standard rate. If it is nil, we know that the actual hours worked and standard hours are equal, guys. Because when we are finding out the difference, if the variance is nil, obviously we should understand that the standard hours and actual hours will be equal, guys. Is that clear? Common sense. Even without calculating, we can understand that. Yes. Whereas labor rate variance, they have given some adverse. We will see. What is the actual wage rate per, hello, per unit? What we use in the variance calculation is per hour. But what they have asked in this question is per unit during the last month. Okay, guys. First, we'll go one by one. Labor efficiency variance. Even without calculating this, we can straight away tell 15,000 hours. But still, some of the students might not think in that way. It might not strike to them immediately. That is why I'm just explaining. Using the formula, how can you calculate it? Standard hours minus actual hours worked into standard rate is the formula for efficiency variance. Okay. Standard hours, I already shown you. 30,000 units into 30 minutes or 0.5 hours, you'll get 15,000 hours. Or else if you want to calculate in minutes, simple. 30,000 into 30 minutes divided by 60 minutes, you will get in hours. Okay, sir, fine. Let us continue. Okay, so standard hours is 15,000. Actual hours we don't know. We will keep it as it is. Into standard rate 50. Standard rate is given here per hour 50, which is equal to variance is how much? Nil. So you calculate. You will get actual hours worked 15,000 hours, guys. Actual hours worked we will get 15,000 hours. Is that clear? Yes, sir. And please be careful, guys. See, listen here. Even without means obviously multiple choice questions means you should try to get the answer as early as possible. I will explain what I already told you once. Listen here. Sir, labor efficiency variance means formula standard hours minus actual hours into standard rate. So if there is any difference, then obviously we need to get a variance which is either favorable or adverse. But when we are getting the variance as nil, it is very clearly understood that standard hours and actual hours are equal, guys. Is that clear? Yes. As soon as we get standard hours, we can decide that even actual hours is 15,000 hours. Okay. Now let us move to labor rate variance. So what is the formula for calculating labor rate variance? Standard rate minus actual rate into actual hours and here rate is per unit or per hour? Per hour. Please be careful. It is per hour. Actual rate as well as standard rate both are per hour. Okay, sir. Fine. Standard rate is already given 50. Actual rate we don't know. Let us keep it as AR into 15,000. That is actual hours which we just now got is equal to 7,500 negative. As it is adverse, I am writing it as negative, guys. Okay, sir. Fine. So take this to the other side. 7,500 divided by 15,000. You will get minus 0.5. Minus 0.5, guys. Now let us interchange the position. Let us take this to the other side. So it will become plus. Even this we will take it to the other side. It will become plus. So that means actual rate per hour is equal to 50.5. 50.5, guys. Please be careful. When it goes to the other side, the sign will become opposite. Minus will become plus. Got it? Yes, sir. So I have given the remaining calculations here. You can see actual rate per hour is 50.5. But what they have asked, see, most of the students would have stopped here. And for the beauty, for the most like confusing thing, they have given that in the options, guys. I feel somewhere most of the students would have stopped the calculation here and they would have marked this. Look here, they have given that answer in the option. And once students see whatever answer they are getting in the option, and they will feel more confident that whatever I am doing is correct or whatever I have done is correct. Guys, please be very careful. What they have asked is not per hour but per unit. So what should we do? In an hour, how many units can we produce? We are supposed to take 30 minutes to produce each and every unit. That means in an hour we can produce 2 units. Yes, sir. So this is per hour means divided by 2. Because in an hour we can produce 2 minutes. So what is the actual rate per unit, guys? 25.25. 25.25. 25.50 also is there in the option. Guys, I felt this was the trickiest question in MCQ. In MCQ, let us agree that yes, this was the trickiest question. Got it? See, so most of the students who know this topic would have done till here and would have selected this as an option. Yeah, sure. We'll move forward because in any labor rate variance calculation or variance calculation, we would have calculated or we would have used rate per hour, whether it is standard rate or actual rate. So student will be in a notion that, oh, what they have asked is per hour. But actually, that is where the twist is. That is where the twist is. They have asked per unit, guys. And when you solve this kind of questions, no, you will be ultra careful or pro careful in the exams. Yes. So please be very careful when you're reading the requirement of the question, guys. Let us move to question number 12. T Limited, a textile manufacturing company, recovers factory overheads on a fixed percentage basis on direct wages. How much is that percentage? They have not given. Okay. And administrative overhead is 25% of factory cost. That is prime cost plus factory overheads will get factory cost, guys. The company has furnished the following data for job 201. Direct materials are 56,350, direct wages are 45,000, sales are 1,90,000 and profit is 25% on total cost. Okay. Whereas factory overhead and administrative overhead, they have not given the amount. We need to calculate it from the given information. Okay, sir. What is the percentage recovery rate for factory overheads for job 201? Okay, they are asking the percentage. Okay, from the given information, what all we can derive, we will just see it. Can we calculate profit? Guys, profit is 25% of total cost. So can I tell it as 20% on sales? Yes. Correct? 25 by 125. If I just write the equation C plus P, that is cost plus profit is equal to sales, then they have given profit percentage on cost. So let us assume cost as 100, profit is 25, sales would be how much? 125. So what is the profit percentage on sales? 25 by 125, guys. 25 by 125. Okay, sir. So sales is 1,90,000 into 25 by 125, we will get profit. Reduce that profit from sales, you will get total cost. Sales minus profit will give us total cost. Okay. Let us put the cost sheet format here. Not the entire format, but whatever is required for the given information. Direct material, direct wages will give us prime cost. 1,01,350. Factory overheads, we don't know. We know that it is recovered as a percentage of wages, but how much percentage, we don't know. So I'm just writing it as F, which will keep it as balancing figure. Okay, sir. I'm just writing it as F. Then we will get factory cost. How much? Prime cost plus factory overhead, which is 1,01,350 plus F. Okay, sir. Then administrative overhead is 25% of factory cost. 25% of factory cost. So 1,01,350 into 25% will give us 25,337.5. Same way, F into 25% will give us 0.25 F. 0.25 F. Correct now, people? Because in the question they have clearly given administrative overhead is 25% of factory cost. I mentioned here in the bracket. Okay. So what is our total cost? Add up now. Add up both. So 1,01,350 plus 25,337.5 will give us 1,26,687.5. And here F plus 0.25 F will give us 1.25 F, which is equal to total cost I have derived here. Total cost is nothing but 1,52,000. So this is equal to 1,52,000, guys. 1,52,000. Now calculate F. So 1,52,000 minus, if you take this to the other side, it will become minus divided by 1.25. Divided by 1.25. So factory overhead in rupees is 20,250. But they have asked in percentage. Percentage of factory overheads on direct wages is how much, guys? 20,250 is the factory overhead divided by direct wages. Direct wages is 45,000 into 100 will give us 45%. 45%. So the option is C. 45%, guys. Okay. Next, question number 13. A garment factory stitches each shirt through a single hand sewing machine operator. Okay. So there is one operator for each machine. The sewing time required to stitch each shirt is 15 minutes. Operator is paid at 65 rupees per hour. The factory works for 40 hours per week and production target is 480 dozens of shirts per week. 480 dozen. Guys, in one dozen, how many shirts would be there? 12 shirts. So total shirts would be how much? 480 into 12. It is 5,760. 480 into 12, it will give us 5,760 shirts. Please be careful. What is given here is in dozens. So in a dozen, there will be 12 shirts. Okay, sir. What are we supposed to calculate? What is the number of hours and number of operators required to meet the shirt's target? Okay. So time required to stitch each and every shirt is 15 minutes, guys. Okay. So target is to stitch how many shirts? 5,760. So 5,760 into 15 minutes if you do, you'll get what is the total minutes required. But what they have asked is hours. So divided by 60 minutes. Because in an hour there will be 60 minutes. Is that clear? 1,440 hours. Or else you can also do like this. 15 minutes means 0.25 hour. 0.25. Correct? No. Yes. 15 by 60 you do. 15 minutes divided by 60 minutes. Yes, sir. 0.25 into 5,760 you do. Straight away you will get 1,440 hours. Okay. And each operator can work for 40 hours in a week. So if I am supposed to stitch so many shirts, we need to totally work for how many hours? 1,440 hours. And each worker can work only for 40 hours per week. So totally how many workers we require? 1,440 hours of labor is required divided by 40 hours per week. So how many operators or workers we require totally? 36, guys. 36. Yes, sir. So 1440 and 36. Yes, sir. 36 operators. Next, going to question number 14. In a factory during the month of October, the following transactions have occurred in respect of purchase and issue of material A. Material A, stock as on 1st October 2025, 100 units at 50 rupees per unit. This is opening stock, people. Then purchases 5th October 2500 units at 55 rupees per unit and 8th October 600 units at 56 per unit. Okay, these are purchases. Issue is on 15th October. One thing you have to note that issue is after all the purchases. So on the date of issue, totally we have 3 lots. Opening stock plus 2 purchases. Totally we have 3 lots. Okay, how many lots? How many units have been issued? 1500. What is the value of material A consumed? Consumed is nothing but issued. Okay. During the period using LIFO, last in first out. Method of pricing issues. Okay, last in first out people. So when we are issuing 1500, first we will issue from year, then year. Okay, I will just give the number. First, second, and last is this one. Got it? Yes, sir. Last in first out. Whatever is purchased last will be issued first. Oh, so out of 1500, first we will issue 600 units at 56. Yes, sir. Remaining is how much? 1500 minus 600, 900. 900 we will issue from here at 55. Yes, sir. So cost of material consumed is 33,600 and 49,500. Total comes to 83,100, guys. Please be careful. They have asked what is consumed. If at all, if they ask what is the closing stock or the value of closing stock, then out of this 2,500, we have issued a 900. Remaining is 1,600 into 55 plus opening stock 100 into 50. This will be the value of closing stock. They are not asked. If at all, if they ask, this is the value. Got it? Yes, sir. So what is the answer? What is the answer? 83,100. 83,100. Yes, sir. A. Okay. 15th one. The following information has been given regarding the two machines of a manufacturing department X Limited for the month of September 2025. Okay, two machines are there. Machine A, machine B. Spare part cost 40,000, 60,000, total is 1 lakh. Okay. Further estimates for the month of October 2025. There is an increase of 15% in the prices. Okay, of spare parts. Just a minute. Let me use this color. 15% increase in the price of spare parts of both the machine. Both the machine A, B, both. There is an increase of 25% in the consumption of spare parts for the machine B only. Machine B only. Okay. Guys, for machine A, only price increase. Whereas for machine B, price as well as consumption. That is the quantity. Both are increased. So let us take it here. What is the total spare parts cost for the month of October? Okay. So present cost is 40,000, 60,000. Take as it is. Multiply that with 1.15. That is 15% increase. No, you can just add 15% also. Or else you can take into 1.15. Into 1.15. Okay, sir. So 46,000 and 69,000 is the increased cost after considering the increase in price. But for machine B, there is also increase in consumption. So I am multiplying 69,000 with 1.25. Hope you're understanding. How did we get that 1.25? 25% increase? No, that is why. Or else you can also do like this 69,000 plus 25% straight away. Got it? And please be careful. Students might get a doubt here. Sir, should we consider the consumption after the increase in price? Yes, because when there is an increase in quantity, obviously increase in price will affect increase in quantity also. Yes, for example, assume I was consuming only 100 kg. Next year I will consume 125 kg. So next year price will be for 100 kg or 125 kg? 125 kg. 125 kg, guys. So increase in price, will it affect the increase in quantity also? Yes. Obviously. For entire 125 kgs, we need to pay increased price as per my example. Okay, sir. So what is the total cost of spare parts here? 1,32,250, guys. 1,32,250, which is D. Which is D. Yes. And guys, please be very careful. Plan it really well before you go and execute it in the exam hall. I would always suggest the students to take multiple choice from 4 o'clock 2 to 4 you answer descriptive type and take multiple choice questions from 4 o'clock. And even at 4 o'clock, sir, should I take the case scenario questions first or should I take independent questions first? Because there will be 20 marks for case scenario questions, 10 marks each for two case scenarios, whereas five independent questions of 2 marks each. So totally 10 marks. I would suggest you, if time is a concern, if you want to manage the time really well, first answer independent MCQs, which will consume less amount of time, guys. Because what I have seen is in case scenario, especially the last one or two calculation will be little lengthy or challenging. There it will eat up the time of the students. So better you start with at 4 o'clock. I'm talking about. I repeat, from 2 to 4 you will answer descriptive type. Correct? Even in that 15 minutes reading time for the question paper, please read it descriptive type. Okay, 2 to 4 answer descriptive type. From 4 start answering MCQ. First try to take independent question if you really want to manage the time well. Then go and answer the case scenario. And please don't take full 1 hour to answer the multiple choice questions. You'll still be left with some time. And go back and complete whatever is still left out in descriptive type. Because you would have not completely done with descriptive type from 2 to 4 o'clock, guys. If you're already done, great, you're God. But if at all, if you're not done, please go back and complete the descriptive once you're done with MCQs. Got it, people? Yes, sir. Yeah, now we will discuss the descriptive question, which is part 2. Under descriptive type, guys, the question number 1 would be compulsory, whereas out of the remaining 5 questions, a student need to answer any 4 by taking one question as a choice. In simple, if I have to tell, under descriptive type, there will be totally 6 questions. Out of that, the first question would be a compulsory question. Student need to answer it. Out of the remaining 5 questions, they can answer any 4 questions by taking one question as a choice. But if in case if student answer all the 5 questions here, then only the first 4 questions will be evaluated and marks will be awarded accordingly. The last question, whichever the student has answered in the order, will not be considered. If at all, if student has answered all the questions including choice. But the question is, sir, will we have so much time in the exam to answer even including the choice? Guys, you will know the answer better. Yes, fine. And this line is very important. Working notes should form part of the answer. Guys, please take care of it. I know in the exam to write working notes or notes, it will consume little extra time, but your answer should include working notes and notes wherever required. Fine? Yes. With this, we will begin the questions discussion, guys. Question number 1. A. ABC Limited manufacture four products A, B, C, and D in the same factory. The following information is given for a certain period. Okay. Input materials in units for A, B, C, D. For all 4 products, it is provided 600, 400, 400, and 200. And average yield 80%, 90%, 96%, and 72%. And if I multiply both of these guys, we will be able to get output in units. Output in units. For example, for A, if I multiply 600 with 80%, then I would be getting what is the output for product A. Yes, sir. The finished goods packaging cost is 4,600. So please be careful. This is for an output, guys. This is not for input. This is for output. Packaging cost is for output, finished goods. Okay. Other information. First one. All the products are packed in boxes where each box is having a capacity of 24 units. So can we calculate how many boxes are required? Yes, guys. So if I multiply both of this, we will be able to get output, right? Yes. And if I divide output by 24, we will be able to get number of boxes, guys. Number of boxes. Hope you understood. Yes, sir. Because each box will consist 24 units. Okay. Product A and product B are packed in a larger boxes, whereas product C and product D are packed in smaller boxes, which cost half of the price of bigger box. Okay. So to pack product A and B, we require larger box, whereas to pack C and D, we require smaller box. But each box will contain 24 units. Whether it is larger box or smaller box, it will contain 24 units, guys. Got it? Yes. And they have also told with respect to cost, smaller box will cost half of the price of bigger box itself. So if I tell for smaller box, if I take 1x, then for bigger box, it would be 2x. Correct? Yes, sir. Next, each box contains only one type of product. There is no product mix up in packaging. Means in one particular box, you can either pack any of this product. Sir, can I mix up A, B, C, D in one box? No, no, that's not possible. In one particular box, you can either keep 24 units of A or 24 units of B or 24 units of C or 24 units of D, guys. Is that clear? Yes, sir. Next, what is the requirement? You are required to find out how many large and small boxes are used, find out the cost of per large box and per small box. They have just given some pattern. The cost of small box is half of large box itself. Yes, using that as a equation, we can solve it. Then the last one, allocate the packaging cost among the four finished products. We have total packaging cost. We need to allocate it how much for each of the products, guys. Got it? Yes, sir. Easy question. Let us look into the solution. Yeah, calculation of output units and boxes required. So input in units and yield in percentage is given. If you just multiply both, we will get output, guys. Better you give a notation. This is like A, we don't use A because already products are in the name of A and B, C, D. So let me use the word P, Q. So let me multiply this P into Q. Okay, sir. This is Q, okay. Yes, sir. So we got the output unit in units. Then boxes required. How do we calculate the boxes? Just divide the output by 24. So what do I do is, I will just give a name here. Just a minute. Let me name this as R. R is equal to P into Q. So boxes required would be what? R by 24. R by 24. Because the capacity per box is 24 units, guys. Got it? So how many boxes are required? 20, 15, 16 and 6. Hope you guys got it. Once we derive the output, just divide it by 24. Because each box can store or pack 24 units, guys. Yes, sir. So how many large box we require? A and B is stored in or packed in large boxes. So 20 plus 15, 35. How many smaller box, guys? 16 plus 6, that is 22. Got it? Yes, sir. Then coming to the cost calculation, let the cost of small box be X and large box would be twice of it. Correct? Yes, that is 2X. Because small box cost is half of the larger box. So we are just considering X and 2X. Okay. So what is the equation? 35 into 2X, that is for larger box, plus 22, that is for smaller box, which we have got here, into X. Okay, so totally how much do we get, sir? 70x for larger box, 22x for smaller box. How 70x here? Hope you guys got it. 35 into 2, 70. Yes. So 70 plus 22, 92 is equal to 4600, guys. 92 hex is equal to 4600. Yes, sir. So just divide it. 4600 divided by 92. We will get the value of x. So X is the cost of small box, which is 50 rupees, into 2 would be the cost of larger box, that is 100 rupees. Hope you got it. Yes, sir. I've just shown the calculation here. Better you guys also show like this in the exam. Don't straight away write the answers. Then allocation of packing cost. We already know number of boxes and we know the cost per box. Just multiply both, guys. Just multiply both. So you need to just multiply both of this. Okay, so for A, 20 large box we require, which we have calculated here. So 20 into cost is 100 rupees. So we will get 2000. Same way we need to do for B, 15 into 100, 1500, 16 into 50. 50, please be careful for small box. For C and D products, we are packing it in small box. So we need to take 50 per box. So 16 number of boxes into 50 will give us 800. Number of boxes 6 into 50, 300. So the total packing cost has to match with 4600, which is already given in the question. Very simple question, guys. Yes, sir. Fine. We will go back. A is done. Now let us move to the B part. ECO Cotton Limited manufactured two joint products, cotton fiber, cotton seed, and a byproduct, cotton linters, by processing a raw cotton. Okay. From the same raw material, three products have been produced, guys, out of which two are joint product, one is byproduct. One is byproduct. Yes, sir. The joint processing cost are 1,46,100. That is joint cost up with the cost incurred up to the split off point. Joint products can be further processed and sold at a higher market price with same sales promotion efforts, whereas byproduct cotton linters can be sold only after further processing. Okay. What we can understand here is, guys, joint products can be sold either at split off point or it can be further processed and sold. That is after further processing. Whereas byproduct has to be sold only after further processing. Do we have a ready market available for byproduct at split off point? No, we don't have it. Oh. The relevant details of these three products are as follows. So first two are joint products, guys. The last one is byproduct. I have just written BP, means byproduct. Okay. Output in kgs is given. Selling price at split off point is given only for joint products, whereas as we cannot sell byproduct at split off point, it is not given here. Okay. Further processing cost per kg 962. Further marketing cost 521. Both are further processing cost, guys. That is cost incurred after the split off point. Okay, sir. Including marketing. Last one. Selling price after further processing per kg is 110, 67 and 10. So for a joint products, we have a selling price at split off point also as well as after further processing. Okay, sir. What is the requirement? You are required to show how joint cost would be apportioned between cotton fiber and cotton seed, which are joint products, using the sale value at split off. Very important. Sale value at what point? Split off point. After crediting net realizable value of byproduct cotton linters. Okay. Guys, here we need to follow certain steps. First, find out net realizable value of the byproduct. What is it, sir? Sale value after further processing minus further processing cost. Both 2 as well as 1 we need to deduct. We get net realizable value of the byproduct. Yes, sir. Deduct that from the total joint cost. Now we will get the remaining joint cost which has to be apportioned for the joint products. Hope you understood. That we need to split between the joint products in what ratio? Selling price at split off point. Selling price or sales value? Sales value. Please be careful. Sales value means we need to multiply the quantity with the selling price. We need to take that as a ratio to split the joint cost between joint products. Hope you got it. I repeat the steps. First, calculate the net realizable value of the byproduct. How is it? Sale value after further processing minus the further processing cost including marketing. You will get net realizable value. That is the joint cost to be apportioned to whom? Byproduct. So deduct it from the total joint cost. Okay. We get the remaining joint cost that has to be shared between the joint products in the ratio of sale value at split off point. So find out the sale value at split off point by multiplying the output with selling price at split off point. Take that as a ratio. Got it? Yes, sir. Next, determine the total profit or loss if the joint products are sold without further processing. Means if it is sold at this point without considering the further processing cost, what is the profit or loss of the company we need to calculate. Then the last one, which of the joint products can be processed further for maximizing profits using incremental analysis profit. So we need to do incremental analysis. That is, sir, what is the increase in selling price if I further process? Minus what is the incremental cost? We need to consider both of this. Do we get incremental profit or loss? We need to check it, guys. Does that clear? Yes, we will see. Okay, 3 requirements are there totally for 5 marks. Each sub question would be for 5 marks, guys. Here. Yes. Chalo. Yes, first one. Calculation of net realizable value of a byproduct. Selling price after further processing per unit is taken here 10. Further marketing cost is 1 rupees and further processing cost is 2 rupees. So we will get net realizable value per unit is 7. Multiply that with the quantity of byproduct, that is 300. So you will get 2100. This is the share of joint cost for which product? Byproduct. So now deduct 2100 from the total joint cost. So total joint cost minus what is the share of byproduct, which is nothing but net realizable value of byproduct. So we will get what is the remaining joint cost, which has to be apportioned between joint products. So 1,44,000 has to be shared between joint products in particular ratio. What ratio, sir? Quantity into selling price at the split off point. Okay, so you will get sale value at split off point. Take that as a ratio. That is, let me just simplify it. I will just remove the 0 and I will write 252 is to 108. So 252 is to 108 is the ratio to split 1,44,000, guys. Is that clear? You can also take as it is, but it is better you avoid zeros. Okay, simplify it. Sir, even 252 and 108 also, can I further simplify it? Yes, but don't spend too much time on further simplifying it, guys. If you can do it easily, do it. If not, you can at least take 252 is to 108. Got it? Yes. So what is the share of joint cost for the joint products? For cotton fiber, it is 1,08,000, whereas for cotton seeds, it is 43,200. Guys, here you have to be careful. By mistake, students might take this itself as a ratio. That is 9 is to 6. Please don't do it because they are not told selling price at split off point is a ratio. They have clearly told sales value. Sales value means it is quantity into selling price. Got it? Yes, sir. Next, second requirement. Statement showing profit or loss if the joint products are sold without further processing. Guys, actually here itself you can continue if you want to save time. So here you have anyway reduced joint cost. Then you deduct further processing cost. You will get profit or loss straight away. Here by doing that you can save time. Whereas here they have done it separately. You can do this way also, nothing wrong. But that will take little extra time. Yeah, sale value at split off point, just copy paste whatever we already got here. Then joint cost also just copy paste, deduct it. Okay. And further processing cost will not come here. Sorry. Further processing cost will not come here because they have told statement showing profit or loss if joint products are sold without further processing. So here further processing cost will not come. Actually, that is easy. If you just deduct here itself, you will get what is the profit or loss. Or else what you do, here just give a notation. For example, this A, this is B. So profit, straight away you calculate A minus B. Correct. Instead of copying the same content again, you guys can do like that. Give a notation and use the equation A minus B. Got it? Here further processing cost should not be considered because we are not further processing the joint products, guys. We are selling it at split off point. Yes, sir. Then incremental calculation. Incremental revenue. How do we get it? Guys, if I further process and sell cotton fiber, it is 110. If I sell it at split off point, it is 90. So what is the incremental revenue? 20 rupees. So 20 into 2,800 you do, you get incremental revenue. Same way for cotton seeds. If I further process and sell it, we get 67 rupees. If I sell it at split off point, we get 60. So what is the incremental revenue per unit? 7 rupees. Multiply that with number of units, 1,800. Okay, we get incremental revenue. Same way, further processing cost you deduct it. This we will incur only if I further process the products. So can I call it as incremental cost also? Yes. So 9 plus 5 is per unit into 2,800. Same way here, 6 plus 2 into 1,800. Yes, sir. Let me put this in bracket. Anything which you deduct, put it in bracket, guys. Yes, sir. So what is the incremental profit you will get if you further process cotton fiber? 16,800. Whereas if you further process cotton seeds, you suffer a loss. That will give a loss of how much? 1,800. This will bring down the total profit of the company by 1,800. So what is the ultimate conclusion? It is better to further process only cotton fiber as it will increase the profit of the company, guys. So it is given here. It is advisable to further process only product cotton fiber and to sell the product cotton seeds, that is this product, at point of separation. So sell this at split off point, whereas cotton fiber you further process and sell it, guys. Is that clear? Yes. And here the incremental calculation is done in total value. Sir, can we do it unit wise also? Yes, I will just show you. Yeah, you can see here. I will just show you. So what is the incremental revenue we will get per unit if I further process cotton fiber is 20 rupees, sir. Okay. Whereas cotton seed, if I further process and sell it, what is the incremental revenue I will get? 7 rupees per unit. Okay. And for this, what is the incremental cost we have to incur? 9 plus 14. Sorry, 9 plus 5, 14. Yes, sir. So that will give us the incremental profit of how much? 6 rupees. Okay. Whereas here we have to incur an incremental cost or further processing cost of how much? 6 plus 2, 8, sir. So that will give a loss of 1 rupees per unit. Loss of 1 rupees per unit. So whatever calculations they have done, can we prove it or can we show it even in unit? Yes, guys. The decision will remain same. Okay. Let us move to C part. Worker X of ABC Manufacturing Limited was assigned a job number 101. He began the job on 1st June at 9 a.m. and completed on 4th June at 12 p.m. Okay, started on 1st June at 9 a.m. and completed on 4th June at 12 p.m. Okay. There are 9 working hours in a day from 9 a.m. onwards. Work done and approved was 1800 units. Actual output is 1800, guys. Other information, standard quantity per hour is 42 units per hour. So you are supposed to produce 45 units per hour. Okay, this is like standard quantity. Wage rate 150 per hour. Bonus as per ALSE plan 50% of the time saved. You're required to calculate the remuneration of worker X on the basis of ALSE as well as Rowan plan. So we are supposed to calculate time allowed. What is the time taken? So time allowed minus time taken would be time saved. Once we derive that, we need to just apply the formulas and calculate it, guys. And please be careful. They have asked calculate the amount of remuneration. They didn't ask only bonus. So what are we supposed to do? We need to calculate both the basic part plus bonus, total remuneration or total wages. If they ask only bonus, then do only bonus calculation. Here they have asked remuneration, so it is understood that they are asking total wages, guys, which includes the basic wages plus bonus element. Basic wages can also be called as guaranteed wages. Okay, yes, 4 marks question. C, yeah. Time allowed. Time allowed is how much? Guys, we have produced 1800 units. So to produce 1800 units, how much time I was supposed to take? How much time I was supposed to take? See, for each and every hour, I am supposed to produce 45 units. I have totally produced 1800. So just divide each other. You will get to produce 1800. A worker was supposed to take 40 hours. 40 hours. What is the actual time taken? On 1st June 9 a.m. work was started and it is completed on 4th June at 12 p.m. So on 1st, 2nd and 3rd, full 9 hours are worked. 9 hours is the working time per day. So 1st, 2nd and 3rd, full 9 hours. Plus on the 4th June from 9 to 12 p.m. 3 hours, guys. So 1st 9, 2nd 9, 3rd 9, whereas 4th June 3 hours from 9 to 12. So actual hours worked is 30 hours. Time taken. Okay. So what is the time saved? 10 hours. How did we get it? 40 minus 30. 40 minus 30. Yes, sir. Once we get this, rate per hour is already given. Just apply the formula and convert the values. That's all. Total remuneration of the worker into, what is that? Into under 50% of ALSE scheme. Okay, fine. We'll apply the formula. So under ALSE scheme, what is the formula, guys? Hours worked or time taken into rate per hour. This is basic part plus bonus. Half of time saved into rate per hour. Half of time saved into rate per hour. So first part 30 hours into 150, then coming to the bonus element, half into 10 hours into 150. Instead of half, can we take 50% also? Yes, guys. So the total remuneration would be 5250 under ALSE scheme. Okay, coming to row 1 scheme, what is the formula? Hours worked or time taken into rate per hour. This is basic part. Then coming to the bonus part. This is bonus. Time taken divided by time allowed into time saved into time rate they have given. Sir, can we interchange these positions? Yes. Normally that is how I will explain in class. So that this would be time saved divided by time allowed into time taken into time rate. Even if you interchange, it will give same answer, guys. You need not worry. Okay. So 30 hours into 150. Okay. Coming to the bonus part, 30 divided by 40 into 10 hours into 150 rupees. Yes. So we are getting 5,625. This is the easiest part, guys. Once a student get this part, now this is important. Once you get this, all other things are very easy. Just applying the formula and calculating it. Yes, sir. We are done with first question, guys. Question number 2, A. Dole Makers Limited sold 6,000 units of musical instrument Dolak. Okay. The cost data for the year ended 31st March 2025 is as follows. Okay. Question is on cost sheet. When question is so lengthy, you can just see the requirement also once before reading the data. You are required to prepare a cost sheet showing raw material consumed, prime cost, works or factory cost, cost of goods sold, cost of sales, and net profit and sales. Okay, we are supposed to prepare cost sheet showing all this, guys. That's all. Question is for 9 marks. Okay. Let me read what all data is given. Expenses paid for pollution control and maintenance 93,400. Sir, where it will come? Guys, pollution control and maintenance, where it will happen? In office or factory? Guys, pollution normally will happen where production is happening. And production will happen where? In factory. So it is a part of what? Factory overheads. This is a part of factory overheads. Hope you got it. Yes. Expenses paid for quality control check activities. So this will come after factory cost, but before cost of production. But before cost of production, I will just show you. If you have my book, you can open. Yes, so this is the cost sheet format, guys. Yeah, you can just observe. Quality control cost will come after factory cost but before cost of production. Yes, sir. Next, lease rent of production assets 1,20,000. Guys, they have told we are paying rent for production assets, but first identify, is it a fixed, sorry, is it a variable or is it in fixed, or is it direct or indirect? Okay, first let us identify whether it is direct or indirect. Guys, is it directly attributable to the product? No, sir. Why? Because if it is directly attributable to the product, they would have given per unit or per hour, something like that. So can I consider it as indirect? Yes, sir. We can consider it as indirect and also fixed in nature, because they have given 1,20,000 fixed amount. Yes, sir. So we can consider this as factory overheads, guys. See, if it was like given per unit or per hour, then I would have taken it as other direct expenses. Other direct expenses. But here they are not given per unit or per hour, so we don't consider it as direct. So it is indirect part of factory overheads. Okay, sir. Next, hire charges paid for hiring specific equipment 315 per hour. Okay. Can I consider this as direct in nature? Yes, guys. Why? I will tell you. Number of hours depend on number of units. And here the higher charges or the rent depends on what? Number of hours. So can I consider it as direct? That is, it is directly attributable to the output or product, production or activity level? Yes. So we can consider this as other direct expenses, guys. Other direct expenses. That is in the cost sheet. We can fit in that items here. Got it here. That is before prime cost. Okay. Primary packing cost, even this will come after the factory cost. You can just see in the format. I will just show you. Yes, primary. Before cost of production, but after factory cost. Okay. Direct labor wages, part of prime cost. Fee paid for technical assistance. Okay, so there is no clarity here with respect to what technical assistance. So let us consider that it is for specific equipment. Higher charges paid for hiring specific equipment is there. No? For that, we are taking technical assistance. So in that case, can we consider this also as direct expenses? Yes. When this is direct, we can also consider this also as direct, guys. Oh, opening stock of finished goods as on 1st April 2024, 2000 units are there, which is cost is 10 lakh 10,000. Closing stock of finished goods as on 31st March 2025, 1000 units are there. Cost is not given. That means we need to find out. Question mark. Cost of production 27 lakh 50,000. It is further ascertained that labor is paid at 1000 rupees per labor hour. Direct wages is already given now. Yes. So 6 lakh divided by 1000 if I do, we will get labor hours, guys. Labor hours. Okay. Which is required to calculate what? The higher charges paid for hiring specific equipment. Once we get labor hours, we'll just multiply that with 315, guys. Okay. Specific equipment is hired for the number of labor hours worked. Okay. So once we get labor hours, we need to just multiply 315 with that. Yes. And please be careful. We need to treat the higher charges as direct because, sir, the hiring charges depends on the labor hours. Whereas labor hours, direct labor hours, it depends on what? Number of units produced or the activity level. Yes. Chalo. The company follows the first in, first out, that is FIFO method for closing stock valuation. Okay. That means one thing we need to notice here. Opening stock is there, closing stock is there. Then also they have given how many units are sold. Can we calculate how many units are produced? Yes. We can consider or we can calculate how many units are produced. And to calculate the value of closing stock, please observe here. Is it from opening stock or is it from the units produced during the current period? Closing stock will be from the units produced during the current period. Why so? Because when we start selling in the current year, first we will sell opening stock. Remaining units will be from the current year production. So we understand that as companies following FIFO, whatever closing stock 1000 units are there, it is from the current period production. Current period production, guys, as per FIFO. Yes. Selling and distribution overhead is 25 rupees per dolak. That is number of units sold is 6000 into 25 people. Yes. Profit is 20% on sales. Actually, sales we will not know. But can we convert this profit percentage on cost? Yes, we can convert it. And calculate profit. Once we add the profit for the cost, we will get sales, guys. Okay. So we are supposed to prepare cost sheet. Fine. We will look into the answer. Easy itself, but the twist is direct material is not given in the question directly. We need to calculate it as a balancing figure. As a balancing figure. So what I would suggest is, student, see, you already know what all information is given in the question. So try to present it, try to arrange it in the cost sheet order. That is in the cost sheet format. Okay, just arrange it, then write the amounts for whichever items they have given in the question. And then you can do reverse calculations. Then you can do reverse calculation. I repeat, you already know, see, you need not write the entire cost sheet format because all these items are not given in the question, correct? Yes. So we already know what all items is given in the question. Yes, sir. I will just show you once. Okay. What all items is given in the question? Yes. Just present them all in the cost sheet format. Okay. First write only the particulars part. Then we can take care of amounts part. Got it? Yes, sir. Okay, fine. We'll move forward for the answer. First, there are few workings to be done. We will see that. Labor hours, guys. I already explained how to calculate it. Total direct labor is 6 lakh and the wage rate is 1000 rupees per hour. So how many direct labor hours worked? 600. Okay. And we need to calculate the number of units produced also. Sir, how do we calculate the number of units produced? Units sold 6000 is given in the first line of the question, guys. 6000. Then in the data they have given closing stock 1000 units and opening stock 2000. So add closing stock and deduct opening stock because we are doing reverse. So the number of units produced would be 5000. And if I ask you the closing stock 1000 units is from where? 5000. 5000. Hope you got it. Yes, sir. Third working note we will see later. Oh. So first try to present the information in the cost sheet format. Direct material consumed we don't know, so we'll keep it as it is. Means in the amount column you can leave it blank. Okay, write the direct material consumed and in the amount column just leave it blank. Okay. Direct labor wages, or else we have another alternative where in this answer, in the suggested answer, they have done a working note 3. You can also follow that way, but that will be little time consuming. So what I would suggest is write material consumed and leave the amount blank. Okay, yes, we will try to figure out later. Direct labor wages is given 6 lakh. Then direct expenses, as I already explained this. So higher charges paid for hiring specific equipment. 600 labor hours is there, which we have done in working into 315 rupees per hour. We will get 1,89,000. Okay, sir. Then fee paid for technical assistance, considering it for the specific equipment, we are taking it here, 126. And just give a note also, guys, for this especially. Telling fee paid for technical assistance is considered to be a direct expenses. Just give a note for it. Okay, sir. So total direct expenses is 3 lakh 15,000. And prime cost also we don't know. Keep it blank. Keep it blank. Here it is given. So should I write? No, no, no. We don't know the direct material consumed, right? Yes. So keep it on word. Okay. You can just write here prime cost and leave it blank. Next, coming to factory overheads. Okay. Lease rent for production assets as it is used in factory. We need to consider it under the factory overheads. And please be careful, guys. This is not paid per unit or per hour. That is why we have not taken it under direct expenses. Sir, what if in case if this was paid per unit or per hour, then even that we would have considered it under direct expenses. Got it? Yes, sir. Expenses paid for pollution control and maintenance 93,400. So total factory overhead will be 2,13,400. Take it. And factory cost we will not know it because we don't know the prime cost. Leave it blank. Right and leave it blank. Okay, sir. Next, Expenses paid for quality control check activities 70,000. Then primary packing cost 51,600. Take it both. Then cost of production, I think, is given in the question. Just a minute. It is given in the question. Yes, it is given. You can see the last line item in this table. Yes, sir. Take it. 27 lakh 50,000. 27 lakh 50,000 is the cost, guys. 27 lakh 50,000. Now, what you can do is you can stop here and do the reverse calculation to derive factory cost, prime cost, and direct material consumed. Or else you can complete first the remaining part here. You can complete this, then go back and do that calculation. Okay. Anyway, is better. Anyway, you can do it. Okay. What I will do is, as of now, I will just pause here. 27 lakh 50,000. Find out this value. How do we calculate it, sir? 27 lakh 50,000 minus 51,600 minus 70,000. As we are going reverse, we need to deduct this too. How much do we get? 26 lakh 28,400. That is our factory cost. From that, deduct factory overheads 2 lakh 13,400. We will get prime cost as a balancing figure. I have written here balancing figure 1, balancing figure 2. Okay, sir. And from 24 lakh 15,000, deduct direct expenses, deduct direct wages. You will straight away get material consumed. You will straight away get material consumed, guys. Is that clear? Yes, sir. 15 lakh. So whenever you are doing like this, better mention like this balancing figure, balancing figure. Hope you can see how I have written here. Is that clear? If not, in this suggested answers, what they have done is they have taken this as a base and they have done a reverse calculation. And for that, they have given a separate working note. Whatever I just now explained, same thing they have given here as a working note 3, guys. You can observe. Just have a look into it. So if you want to save time and if you're running short of time, maybe you can straight away do the calculation in the cost sheet format itself in a reverse way, guys. Okay, because this will actually take time to do this working note 3. Okay, fine. So we are done till cost of production. So we need to add opening stock and closing stock of finished goods here. Opening stock of finished goods is 2,000 units. They have already given the value 10 lakh 10,000. And closing stock of finished goods. As company is following FIFO basis, closing stock is from where? Current cost of production. So how many units are produced, guys? 5,000 units are produced. What is the cost of it? 27 lakh 50,000. So can I calculate what is the cost per unit? Yes. 27 lakh 50,000 divided by 5,000. Divided by 5,000. You will get per unit. You will get per unit. Multiply that with 1,000 units. You will get closing stock. Clear? Under FIFO method, closing stock will always be from the current period of production, guys. Because as soon as the year begins, first we will sell the opening stock. Then only we will start selling from the current year productions. Okay, sir. Fine. So we will get cost of goods sold 32 lakh 10,000. Then selling and distribution overhead 25 rupees per unit. And obviously this is not for 5,000 units, guys. This is for 6,000 units. Yeah, even if I ask you this cost is for how many units, it is 6,000. Got it? No, because cost of production is for 5,000 units plus 2,000 minus 1,000 will give you how much? 5,000 units cost of goods sold. Sorry, 6,000, 6,000, 6,000 units. Yes. So 25 rupees into 6,000 will give you 1 lakh 50,000. So cost of sales is 33 lakh 60,000. So they have given profit percentage on sales, but we don't know the sales figure yet. So convert that into cost, which we will get 25% profit percentage. I've just shown the rough working here. Cost plus profit is equal to sales, guys. So as profit percentage is given on sales, let us assume sales as 100. So profit would be how much? 20. So cost would be the balancing figure. 100 minus 20, cost 80. So the profit percentage on cost would be 20 by 80, which will give us 25%. So 33 lakh 60,000 into 25% will give us 8 lakh 40. So the total sale value is 42 lakhs. 42 lakh. Is that clear? Yes. Very well framed question. But only one thing you need to decide whether you will prepare a separate working note for this or can we calculate it directly here itself by doing a reverse working. And if at all, if you are doing reverse working, please mention like this as balancing figures, guys. That is a must. Got it? Yes, sir. Fine. Done with cost sheet thing. Next. B. This is really a tricky question, guys. For 5 marks, what they have asked here or what they have given here is too much. Okay. Chalo. A producer of oils purchases 400 liters of oil at 75 rupees per liter in a containers of 40 liters each. Okay. 400 liters of oil is purchased at 75 rupees per liter and it is packed in a container, and each container will contain how many liters of oil? 40 liters. So 400 liters divided by 40 liters. So how many containers, guys? 10 containers. Okay. Other expenses at the process were 37,350, including an abnormal loss of 12,500 due to an accident. So while recording the expenses on the debit side of process account, should we consider full 37,350 or should we exclude 12,500? We need to deduct 12,500, guys, because abnormal loss or a cost of abnormal loss will be separately recorded in costing P&L account on the debit side. Oh. So on the debit side of process account, we need to debit only 37,350 minus 12,500. Okay, next, let us continue. Normal waste at the process is 10%. So 400 liters is the input into 10%, that is 40 liters is a normal loss. Waste is sold at 10 rupees per liter. Okay, that is 440. So 400 into 10% will get 40, 40 into 10, 400 rupees is the scrap value for normal loss. Okay. And each empty container is sold for 50 rupees. Okay, guys, we are purchasing the oil in a container. Totally how many containers are there? 400 divided by 40, that is 10 containers, and each container we can sell it. This is not my main product. My main product is oil, but when I'm purchasing oil, we are also getting a container, and that container is not waste. I can put it for some scrap and we get how much, sir? 50 rupees. We are getting 50 rupees for each container. Okay. And are we paying anything extra to purchase container? No, no. Each liter of oil we are paying 75 rupees, and that oil will come in a container. Each container will store 40 liters, guys. Got it? So please be careful. We are not paying anything extra to purchase the container. Container is coming along with the oils. Okay, sir. Generally, 10% of the containers get damaged so badly that they become unsaleable. So totally we have 10 containers. In that 10%, we cannot sell. That means we can sell only 9. Correct? 10% of 10 is 1. So remaining is how much? 9. However, in the given situation, more containers were damaged and only 5 containers were in a saleable condition. So 10% was like loss, like normal loss. So how much is actually in a saleable condition? 9. But here they are telling we could sell only 5. That means remaining 4 is a abnormal loss. Actual output was 7,500, sorry, 375 liters, which is sold at a profit of 20% on cost. Okay, so total input was 400, whereas output is 375. And please be careful, they have given a normal loss also. So 400 minus normal loss 40, it was supposed to be 360, but we are getting 375. That means there is an abnormal gain of 15 liters. 15 liters. Is that clear? Guys, please be careful. In the process, we are processing the oil, not the container. But in this process, we are also getting some realizable value or scrap value for the containers. Should we consider that also? Yes, that will reduce our total cost or overall cost of the process. Yes. You are required to prepare a process account and income statement. Yes, sir. For 5 marks. Guys, whenever you see this kind of question, what I would suggest is try to keep this for the last. Okay, because in the beginning itself, if you try to answer this, then you will end up consuming too much time, especially for this kind of questions. Sir, what if I have already answered A? It's okay. For B, you can leave necessary space and go for next questions, guys. Got it? Because without even your knowledge, you will start consuming too much time for this kind of questions. Yes, chill, fine, we will see. I've just done some calculation here for oil and containers separately. First, let me explain for oil. What is the total input, guys? 400 liters. In that, what is the normal loss? 10%. So 10% of 400 comes to how much? 40. So what is the expected normal output? 360. But actual output is how much? 375. That means there is an abnormal gain of 15. We expected that 40 units will be normal loss or we will be losing it. But actually out of that, 15 units turned out to be a good units. So if you ask me what is the actual loss, it is only 25 liters. 25 liters, guys. Okay, this is with respect to oil. Coming to the container. So totally we have purchased 400 liters and each container has a capacity of 40 liters. So how many containers, people? 10 containers. Hope you are able to get it. 400 divided by 40. Yes. In that 10% is normal loss, which is 1. So how many units I was expecting to sell it at 50 rupees per container? 9 containers. But actually we could sell only 5. That means remaining 4 is what? Abnormal loss. Abnormal loss. Yes. For this, I was already prepared, whereas this is like unexpected. If there was no abnormal loss, then I would have sold 9 containers at 50 rupees each, guys. Fine. Come to the solution. Yes. So process account. So they have given a separate columns for container and oil liter. Even I would suggest you to prepare like that itself, because even containers will affect the cost, guys. It will affect the cost. We have a scrap value for that. So please present a separate column for that. Okay. But please be careful. You should be knowing that container is not our output. We are processing what? Oil in our process. That is our product. Got it? Yes. Chalo. Material 400 liters into 10 per liter. Sorry, 400 liters, I guess, into 75 per liter. So it is 30,000. Yes, sir. And for this, we are getting how many containers? 10 containers totally. How did we calculate it? 400 liters divided by 40 guys. 10. Okay, sir. Then other expenses 37,350, but in that 12,500 is abnormal part. So deduct it. Remaining you record here. Debit side. Okay, sir. So debit side done. This we don't know still. Keep it on hold. Then coming to the credit side. Normal loss of oil 400 into 10%, which comes to 40. And each liter we can sell it at 10 rupees. So scrap value is 400. Scrap value is 400. That is 40 into 10. Okay, sir. Now coming to the container part. Guys, container, let us close first units part. We are taking units part here. Okay. Yes. Normal loss is 1. Okay. Expected sales was 9. But in that we could sell only 5 at 50 rupees per container. So 250. Remaining 4 is like an abnormal loss. So abnormal loss of how much? 4 into 50, 200. Got it. We can call this, instead of writing this as abnormal loss, both put together. Can we write it as a realizable value? Yes. Because abnormal loss, we will also separately record it in costing P&L account as, or in the income statement. Yes. So instead of showing this separately, as we have shown normal loss here, and for normal loss units, we will not get any sale value. We cannot sell it. Got it? Yes. Only the remaining containers, that is 9 containers, I would have sold it at 50, but I could sell only 5. That means remaining 4 is a loss. For this 4 containers, how much is the total loss? 200 rupees. That is 50 rupees each. Okay. So instead of writing it separately like this, you can also present it together. Realizable value for 9, it is 450. You can write like this also. But out of this, for 4 units, we need to also consider it in costing P&L account, debit side, as a loss. Okay, sir. So containers matching at 10, then 10 matching. Yes, sir. Now coming to the oil part. Oil part. Actual output is how much, guys? 375. 375. So first let us close the units column. So here it is 400. Okay. Don't do the total here. Please be careful. Just do the calculation like that itself. 400. Whereas here it is 415. So credit side is more. When credit side is more, on the debit side, what is the balancing figure, guys? In the units column, the balancing figure would be abnormal gain. Abnormal gain. Got it? Yes, let me just write it. This is like balancing figure. I have shown this calculation already also before we started with this process account. Yes, so this is like balancing figure, guys. Let me write the B part again. Okay, fine. Now let us come to the cost calculation. Total cost is how much? Total cost 30,000 plus 24,850. So we will get 54,850 minus the scrap value. Scrap value for oil you take, that is for normal loss units you take 400. Then for container you have to take fully, guys. That is for all 9 containers. Sir, why, sir? We should take only 250, no, sir? No, guys. This is not main product. See, if it is a main product, that is for oil, will we take any scrap value of abnormal loss units? No, no, we will not take it. If it is a main product, we don't consider the scrap value of abnormal loss units while calculating the cost. We just deduct only the scrap value of normal loss units. But here container is like a byproduct for us. So anything which we are supposed to get from that will reduce our cost. So our expectation was that we will get 50 rupees for each container. For how many containers? 9 containers after considering a loss of 1 container. So we were expecting to receive a scrap value or the realizable value for how many containers, guys? 9 containers. So should we deduct full 450 here? Yes, please be very careful. I repeat it, guys. If it was assumed abnormal loss of oil, and if we are getting any scrap value for abnormal loss, will we deduct it while calculating the cost? No, we will not deduct it. But here we are taking what can be the realizable value for the containers, and container is not our main product. It is like a byproduct. Anything which we can realize from the container, should we deduct it from the cost? Yes, guys. Is that clear? Yes. So we are expecting 50 rupees for each container. For how many containers? 9 containers after 10% of loss out of 10. So for this, we are not expecting anything because this was anticipated at the beginning itself. So obviously we will not get any scrap value for this. Clear? This we are not selling, guys. Please be careful. Yes, sir. Whereas for the remaining 9, we were expecting that we will get 50 rupees, which we call it as realizable value. Yes. Sure. So 450 you deduct. Then this 400 is the scrap value of the normal loss of oil, guys. Of oil. That is our main product. Okay. So you will get a total cost of 54,000 divided by total input minus normal loss. Total input is 400 minus normal loss of oil 40. So 360 you will get. What is the cost per liter? 150. So multiply 375 into 150. You will get 56,250. Same way abnormal gain. 150 into 15. You will get 2,250. 2,250. Is that clear? Yes. Now close the amounts column. It has to match. Got it? Yes, guys. Sure. Then they have also asked income statement. First, we will record the sales. They told we are selling it at what value, people? We are selling it at 56,250. Have they calculated the sales? Okay, no. Fine. 56,250. We will take it here as a cost. 56,250. Then sales, they are just given on pattern. I guess certain percentage is given. Just a minute. I will just have a look into it. Profit percentage is how much? 20% on cost. 20% on cost. Yes. So whatever is the 56,250 is there, no? Plus 20%. Plus 20%. I will just check it. 56,250 plus 20. 56,250 plus 20%. Yes, 67,500. Better is to show it here. 56,250 plus 20%. And 20% is on cost, guys. Yeah. Then abnormal loss container is there. So that is this part. 200, I told you. We need to show it on the debit side of costing P&L account or income statement. Okay. Then there is an abnormal loss, accidental loss given 12,500, which we deducted here no, on the debit side. That we will record it. 12,500. Yes. Okay. Sir. Then coming to abnormal gain. Abnormal gain value is actually 2,250. But is this the net gain? No, guys. Because for this 15 units, I would have already recorded a scrap value here. But will I get it now? No. As these units are converted into a good units, we will not get scrap value for 15 units. So what should I do now? From 2,250, deduct the scrap value. That is 15 into rupees 10. Deduct it because that is like a loss for this abnormal gain accounts. Remaining will be the net gain, guys. So 2,250 minus scrap value. So how much is that scrap value? It is 15 liters into 10 rupees. 15 liters into 10 rupees. Yes, that is the scrap value. Deduct it from 2,250. So you will get what is the net abnormal gain. Hope you guys remember. We used to do the abnormal gain account and normal loss account. We used to adjust it here, but here they have not asked abnormal gain account, normal loss account and all. It is not required. And here actually they have done net calculation. That is 150 is the cost minus the scrap value is 10 rupees. So what is the net cost? sorry, net gain 140. 140 into 15 liters. Is that clear? Or else from 2250, we have 2250 as a value of abnormal gain. From that, reduce scrap value. How much is the scrap value? 15 into 10 rupees. 150. So we'll get net abnormal gain. Got it, people? Yes. Sure. Fine. So we will get a net profit, which is a balancing figure 650. First total of credit side is more 600. Deduct all the debit items. You will get the balancing figure as net profit, which is 650. Which is 650, guys. Yes. Okay. Let us move to question number 3. Gold Drive Bank is having a branch which is engaged in processing of gold loan and car loan application in addition to their other services to customers. The bank has hired 3 direct professional workers for processing gold loan applications. Okay, 3 for gold loan and 4 direct professional workers for processing car loan applications. So these professionals will be working only for the respective services, guys. So 3 is for gold loan application and 4 is for car loan applications. As they are mentioned clearly direct, they will be working only for those services. In addition to the above, following expenses are incurred by the branch. Branch would be providing various services. Out of the 2 services is gold loan application and car loan applications. Okay, na? Yes. Branch manager who supervises all the activities of a branch is paid at 1,10,000 per month. Okay, per month. Legal charges, printing and stationery and advertising expenses are incurred at 28,000, 15,000 and 20,000 respectively for a month. Okay. Other expenses per quarter. Please be careful. Few are given per month and here it is given per quarter. 51,000. Depreciation on building. 4,20,000 per annum. Okay. Overhead cost. Overhead cost of the branch allocable to the processing of gold loan application and car loan application is 20% and 15% respectively of total overhead cost of the branch. Okay, guys, whatever they have given here is the cost of the branch. In this, how much is allocable for the gold loan application? 20%. How much is allocable for car loan application? 15%. Got it? Yes, sir. Next, number of applications processed. Gold loan 400 applications per month and car loan 500 applications per month. Okay. So even cost calculation you can do better per month, guys. First 2 is given per month itself, whereas this is given per quarter. So in a quarter, how many months? 3 months. So divide it by 3. This divided by 12. You will get what is the cost per month. Then allocate it to both gold loan application and car loan application in 20% and 15% ratio. Okay. So what is the requirement? 8 marks question. You are required to compute the total salary of direct professionals for processing of gold loan and car loan applications respectively by assuming that cost of processing car loan application is same, means equal as gold loan application. Okay. For this, they are not given what is the cost. So we need to calculate that. So first we need to form an equation, guys. Overhead costs are given. We can find out how much is allocable for gold loan and car loan application. But this will be like X for us. How much ever is paid to the direct professionals. And we need to find out that. We need to form an equation. They have also given one clue that here the cost of processing car loan application and gold loan application will be equal. Okay, that is like a clue given for you. Find out the total cost of processing a car loan application. So once we do this, this will be easy, guys. Yes, first part is challenging. Yeah. Let the salary of one direct professional be X. So how many professionals are there for gold loan application? 3. So it will be 3X. Whereas for car loan, we have 4 professionals. So it will be 4X. For one professional, let us assume the payment or salary would be X, guys. Okay, sir. So 3X and 4X here. Okay. 3 is nothing but number of professionals. Here also 4 is number of professionals, guys. Okay. Then coming to the other overheads cost of the branch is given, no? So we will do that. Branch manager salary is 1,10,000. So 20% is for gold loan and 15% is for car loan. Yes, this percentage also is given in the question itself. Then legal charges, printing and stationery and advertising is given per month 63,000. 20% is per year and 15% year. Okay, sir. Then other expenses is given per quarter, divided by 3, because now there will be 3 months in a quarter, guys. Okay. So we'll get 70,000 per month. So share it between both the applications in 20 and 15% ratio. Then depreciation per annum is given 4,20,000 divided by 12 months. You will get 35,000 per month. Again, share that in 20 and 15%. Okay. So what is the total cost per month? Add up all this, you will get 45,000 plus that is the professional salary, that is 3x. Then if you add up all this, 33,750 you will get plus 4x, that is professional salary. Yes. Number of applications per month, here it is 400 and 500 given in the question. Yes. Sir, instead of doing this individually, in order to save time, can I add up all this and then divide it in 20% and 15% ratio between both of this? You can do that. But guys, here it is for 8 marks. I would suggest you to present it individually. But if at all in the exam, if you are running short of time and you are supposed to complete this question as early as possible, then you can do that. Okay, you can add up all this cost. Okay, so you will get total cost here. Then 20% of that you take here, that is 45,000, and 15% of that, which is 33,750, you take it for this guys, plus 3x here and 4x here. Okay. So let us form an equation here. 45,000 plus 3x divided by 400 will be equal to 33,750 plus 4x by 500. Why so? Because they clearly told in the question requirement itself, they told cost per car loan application will be equal to the gold loan application, guys. So I'm just writing it equal to here. Okay. So do cross multiplication. Let us take 400 this side. So 400 into 4x will be 1600x. Then 400 into 33,750 will give us 1 crore 35 lakh. Okay. So if I take 500 also at the other side, it will become a multiplier. 500 into 3x, 1500. Then 500 into 45,000, 2 crore 25 lakh. Okay, sir. Fine. So now let us take 1500x to the other side. You will get 100x and bring this to the other side. 2 crore 25 lakh minus 1 lakh, 1 crore 35 lakh will give us 90 lakh. So this will be like 90 lakh is equal to 100x. So x is equal to 90 lakh divided by 100. 90 lakh divided by 100. We will get 90,000. We will get 90,000 guys per professional. So for gold loan, we have 3 professionals. So it is 3 into 90,000, 2 lakh 70. Whereas for car loan application, we have 4 professionals. So 4 into 90,000, we will get 3 lakh 60. 3 lakh 60,000. Yes, sir. Next, computation of cost of processing car loan application. Okay, the total cost they're asking. So we already got here. Just take the same 33,750 plus 4x. Now we already got x, no, 90,000. Just replace it. So 33,750 plus 4 into 90,000. We will get 3 lakh 60,000. Or else you can also take it from here directly. Okay. So we'll get 3,93,750. This is total cost divided by number of applications, which is 500. So we will get 787.50 per application, guys. That is car loan application. Got it? Yes, sir. Done with A part. Now let us go to B part. Sub question B. Wings Institute of Air Hostess training has reserved a spacious training hall for 25,000 on a weekly basis. Okay, so 25,000 is a rent per week with a seating capacity of 320 trainees. The institute has designed an intensive training schedule comprising 3 training sessions per day. Per day, there will be 3 sessions. Okay. 5 days a week for 25 weeks on aviation and hospitality. Okay. So if I ask you how many sessions, guys? So 3 per day. How many days per week? 5 days and into 25 weeks. So it is 3 into 5 into 25. So total number of sessions. Got it? Yes, sir. So if I ask you total number of days, it is 5 days into 25. Each week will have 5 days, guys, during which training will be provided. That means 2 days will be holiday. Okay, sir. Training delivered by the lead trainer to whom an honorarium of 3,600 per training session is paid. How many training, guys? 3 into 5 into 25. Please be careful. So training cost to the lead trainer would be 3,600 into 3 into 5 into 25. In addition, she receives a travel reimbursement of 500 per day, not per session, per day. Okay, so 500 into 5 into 25. And refreshment costing 1,200 per week to maintain comfort and focus during sessions. So, how much is the total cost? 1,200 into 25 weeks. Okay, please be careful. This is per session, whereas this is per day, whereas this is per week. Okay, please be careful when you are multiplying. Okay, yes, sir. For focus and comfort, they are giving refreshment. See how it is. Next one. She also takes 2 lectures per week on safety and customer service during weekends. Okay, this is a separate story. Whatever they gave here, it is a separate story. This is on aviation and hospitality training, guys. Okay, yes. So on weekends, she is taking 2 lectures per week on safety and customer services during weekends only at 5,000 per lecture, inclusive of traveling and refreshment, nothing extra. Ensuring complete coverage of aviation education. Okay, please be careful, guys. This training is provided during 5 days, so let us consider it like from Monday to Friday, whereas this training is given when during weekends, that is Saturday and Sunday. So 2 lectures per week, and for each lecture she is charging how much? 5,000 per lecture. So 2, how many lectures totally? 2 into 25. 25. Yes, sir. Cost would be how much? 5,000 into 2 into 25. Got it? Yes, sir. Trainee support services covering utilities and essential training aids amount to 2020 per week. So multiply this with 25. You are required to 6 marks question. Calculate the total cost per training batch. Okay. Per training batch means there is only one batch, guys. They didn't mention anything about multiple batches. But in one batch, how many trainees are there? 320. Okay. So there will be only one batch. Second one, determine the minimum training fee per trainee in a batch to cover cost if the batch is fully occupied. Means if batch is fully occupied, how many trainees? 320. So what is the fees to be charged? So total cost divided by 320, guys. That's all. Total cost divided by 320. That is nothing but the break-even fees. Break-even fees. So as per this, they don't intend to make any profit. Whatever is their cost, if they want to recover that fully, how much fees they have to charge for each training? They're asking it. Oh, last one. If the institute targets 20% profit margin on the training fee and decides to charge 14,800 per training, then calculate the minimum percentage of batch size to be filled. Okay. They want to make 20% profit on fees and they want to charge 14,800 per training. They're asking in order to make 20% profit and to charge 4,800 rupees per training, how much batch should be filled? How much batch has to be? Maximum size is 320. Okay. But in order to achieve this, how much students or trainees has to be achieved? They're asking. Yes, sir. Yeah, sure. Calculation of total cost per batch, guys. So all charges is per week. So multiply that with number of weeks, 25. So 25,000 into 25, 6,25,000. Honorarium to the instructor or lead trainer, 3,600 is per session. So into 3, because 3 sessions per day, into how many days per week? 5 days into 25. That is 25 weeks. So this training will happen for 25 weeks, guys. So 13,50,000 is the cost for the trainer. Reimbursement of travel expenses 500 rupees per day. So 500 into number of days per week into number of weeks, 60 to 500. Refreshment is per week, so 1,200 per week into number of weeks, guys, 30,000. So please be careful with this calculations. Okay, especially when you are multiplying. Lectures on weekends. Okay, this is for weekdays, that is 5 days in a week. Coming to the weekend part, 5,000 per lecture. So 2 lectures are there for each week into number of weeks, 25. So 2,50,000. Yes, sir. Administrative and miscellaneous expenses is given per week 2020. So multiply with number of weeks, you will get 50,500. So the total cost of the batch is 23,68,000 guys. As number of batches is only one, divide, you'll get cost per batch is 23,68,000. If by chance, if they ask, if we need to calculate cost per training, then divide it by 320. But they have not asked, I'm just telling you. Just divide it by 320. They have asked this in the next requirement. Minimum fee per student in a batch to cover full cost. So how much is that? Total cost divided by 320 students, guys. So you'll get 7,400. We can also call this as break-even fees to recover full cost. If all the students are there or trainees, how much should we charge per student? Okay. Next, total fee to be recovered to achieve 20% profit margin on the fee. Guys, if profit margin is 20% on fees, so let us assume fees as 100. So profit would be 20, cost would be 80, balancing figure. So profit percentage on cost would be 20 by 80. Yes, sir. 20 by 80. So 23,000, 23 lakh 68,000 is the total cost plus profit would be how much? 23 lakh 68,000 into 20 by 80. That is the profit element. So we'll get total fee to be collected is how much? 29 lakh 60,000 including profit. Including profit. Yes, sir. So we need to charge per student or per trainee how much? 14,800. So just divide, guys. 29 lakh 60,000 divided by 14,800. We will get to know. To achieve this, we should have how many students? 200 students per batch. And what is the batch size to be filled, guys? Total capacity is 320. So we need to fill at least 200 students. So percentage wise, how much it would be? 200 divided by 320 into 100. It will give you 62.5%. So in order to achieve this, whatever company's target is there, in order to achieve this by charging 14,800 rupees per training, they should have at least 200 students, which is 62.5% of the total batch size, guys. Is that clear? Yes. Done with this. Let us move to question number 4. The following data pertaining to a company engaged in manufacturing and sale of single product during the year. Okay, budget data is given, actual data is given. Sales in units, sales in rupees, direct materials in rupees, direct labor in rupees, variable overhead in rupees, guys. But please be careful, guys. Here, first we will see what is supposed to be calculated. Okay, first we will read that. Additional information is given below. Standard and actual. Direct material per kg, 10 rupees, 8 rupees. Direct labor rate per hour, 10 rupees, 12 rupees. Okay. You are required to calculate direct material usage variance, material price variance, labor efficiency variance, labor rate variance, and variable overhead cost variance. So totally it is for 7 marks, guys. Okay, sir. But one thing to take care, guys, please be careful. Budgeted data will always be given for budgeted output. All this data, numbers that is in rupees, whatever is given is for budgeted output of what? 60,000. Anyway, sales is not required because we are not supposed to calculate sales variance. But with respect to cost, all this cost is given for the budgeted output. If I want to convert that into standard, because standard should always be for actual. How do we calculate standard? Simple. The respective cost divided by 60,000 into 66,000. That will give us the standard data for actual output. Got it, guys? Please be careful. Budgeted data will always be for budgeted output, which is 60,000 in this case. Whereas standard data should always be for actual output. Because when we are comparing standard with actual, the base should be same, guys. All these figures will be for actual output. Yes. So we need to convert even the budgeted data for actual output, which we actually call it as standard data. Like standard cost, standard labor hours, or standard quantity like that. Is that clear? Yes, please ensure that because that would be the key thing here. Oh, fine. We'll move to the solution. Yes. First, materials calculation. Budget is given for 60,000 units. So cost is 28 lakh 80,000 and price is given 10. So if you just divide it, you will get quantity. Budgeted quantity, not standard quantity. Yes. So if I want to calculate standard, then it should always be for actual output. So budgeted output was 60,000 units, whereas actual output is 66,000 units. So can we convert? Yes. Hope you understood this calculation. Budgeted material cost is given, guys, 28 lakh 80,000 divided by budgeted standard price 10 rupees, which is given in the next table. Got it? I will just show you here, 10 rupees. Got it? So 28 lakh 80,000 divided by 10 we have done. Yes, sir. So we got budgeted quantity. This is for an output of 60,000 units, but our actual output is 66. Let us convert it. So 2,88,000 divided by 60,000 into 66,000. We will get 3,16,800 into 10. We will get standard cost 31,68,000. Coming to the actual will always be for actual output. 36,30,000 is the cost, whereas actual price is 8 rupees. Divide, guys. Just divide this two. You'll get actual quantity. Actual quantity. Yes, sir. Sir, you might ask me now, is this mandatory to show in the exam? Guys, you can straight away do this calculation also. For example, they have given this in the question, right? Yes. So this is for 60,000 units. So calculate how much for 66. How is it, sir? 28 lakh 80,000 divided by 60,000 into 66. You will get this figure. Correct. Once you get this figure, divide it by 10, you will get the standard quantity. So in that case, you can avoid this presentation, guys. You can do that. Clear? But whatever calculation I told you, no, this calculation, please show that. Below this, clearly show it. 28 lakh 80,000 is for 60,000 units. How much for 66? Okay. Yes, you will get this much. Fine. Now coming to the variance calculation. Material usage variance. Guys, come on, tell me along with me. What is the formula to calculate usage variance? Standard quantity for actual output minus actual quantity into standard price. Yes, sir. So standard quantity minus actual quantity into standard price will give us 13,69,500 adverse negative. Okay, sir. Next, price variance. What is the formula to calculate the price variance? Standard price minus actual price into actual quantity. Yes, sir. So standard price minus actual price into actual quantity will give us 9,07,500 favorable. Favorable. Yes, sir. Next, coming to labor data. Labor also they have got given budget, then they have converted that to standard. So, sir, can I do this or can I straight away do the standard calculation also? However, you are comfortable, guys. I will just explain how they have done. Budgeted labor cost they have given as 43,20,000 divided by standard rate, guys. You will get budgeted hours. This is called budgeted hours. Got it? Yes, sir. Now convert it for actual output. 4,32,000 is for 60,000. How much for 66,000? So 4,32,000 divided by 60 into 66. Or you can multiply with the respective thousands only. That is 4,32,000 divided by 60,000 into 66,000. You will get 4,75,200. We call this as standard hours for actual output. Multiply that with 10, you will get standard labor cost. Then actual data is given in the question. Actual labor cost 58,80,000 divided by actual rate. You will get actual labor hours, guys. Got it? Yes, sir. Or else you can straight away do this calculation. How to calculate this, sir? Instead of presenting this columns separately, we can straight away start with this and do only this too. How is it? To derive this, you need to do 43,20,000 divided by 60,000 into 66,000. You will get this. Then divide that by 10, you will get standard hours. Got it, people? Yes. Chalo. First, labor efficiency variance. What is the formula, guys? Standard hours for actual output minus actual hours worked into standard rate. So, standard hours 4,75,200 minus 4,40,000 into standard rate. You will get 3,52,000 favorable. Then coming to rate variance, standard rate minus actual rate into actual hours worked, 4,40,000. Yes, sir. So you are getting 8,80,000 adverse. Okay, and please be careful. They have not asked all the variances. Whatever they have just asked, please do that. Then coming to variable overhead cost variance, the formula is standard variable overhead for actual output minus actual variable overheads, guys. So in this suggested answer, standard is missing. Better write that also. Standard variable overhead for actual output minus actual variable overhead. And whatever Overheads they have given is budgeted, guys. Please be careful. So 72 lakh is given in the question for 60,000 units, but actual output is 66. So convert that. We get standard variable overhead minus actual variable overhead. We will get 2 lakh 64,000 adverse, guys. Is that clear? So please be careful. Don't take 72 lakhs directly, guys. This is for budgeted output. Standard should always be for actual output. Budgeted will be for budgeted output, whereas standard has to be for actual output. Guys, we are taking in other place the actual data. When we are comparing actual, for actual cost will always be for actual output. When we are comparing that with something, obviously that also should be for same level of output. Yes, so please ensure that the standard data will always be for the actual output. That is very important in variance calculations, guys. Yes, sir. Okay, let us move forward. This is done. Yeah. B. Subquestion B. The following financial information is available for company with a normal production capacity of 40,000 units for the year ended 31st March 2025. Okay, so the capacity is 40,000, guys. Sales amounted to 8 lakh, units sold is 35,000 units. Okay. There was no opening and closing stock of finished goods. That means units produced is 35,000, units sold is 35,000 units, but capacity is 40. Okay. Direct material and direct wages cost were 3 lakh 50,000 and 2 lakh respectively. Actual factory expenses, that is factory overhead, were 1 lakh, of which 55% is fixed. That means 55,000 is fixed, the remaining 45,000 is variable, guys. Okay. Administrative expenses related to production activities incurred during the year but not paid were 50,000, which were entirely fixed. Okay, not paid and all doesn't matter. Should we consider it as administrative overhead? Yes, 50,000 fully fixed. Okay, even if it is not paid, still we need to take it, guys. Actual selling and distribution expenses amounted to 20,000, of which 35% were fixed. So 35% of 20 lakh means 7,000. Yes, so 7,000 is fixed. Remaining 30,000, 13,000 is variable, guys. The company earned interest and dividend income totaling to 10,000. Pure financial item. Financial income. Pure financial income. Not recorded in costing books. Yes. Remaining, guys, see, this data will be recorded in both the books. Whereas only 10,000 will be recorded in financial books. Okay. But one thing we need to take care here is, see, factory, actual selling and distribution as and also administrative overhead as a fixed elements. Guys, fixed overheads will always be observed based on what? The normal capacity. Clear? We will fix a overhead absorption rate. Overhead absorption rate based on what? The capacity. And for each and every unit we produce and sell, we will be observing so much, which will lead to either under absorption or over absorption. In this case, it will lead to under absorption because actual production is only 35,000. So it will lead to under absorption, guys. Got it? Yes, sir. I will explain while solving, while going through the answers. I will explain. Don't worry. You are required to prepare the cost sheet and ascertain the profit as per the cost accounts for the year ended 31st March 2025. One more question on cost sheet. But this question is actually on cost accounting system. But they're asking you to prepare cost sheet. Then maybe later you will reconcile the profits. Assuming that the indirect expenses are observed on the basis of normal production capacity, they are clearly given, and not the entire indirect expenses, only the fixed portion. Fixed portion we will observe on what basis? Normal production capacity, guys. Okay. And a statement reconciling the profit shown by the financial and cost accounts. Okay, reconciliation also they're asking. So this question is for 7 marks. Yes, sir. Yeah, we'll start with first cost sheet. Direct material, direct wages is already given. So you add up both, you will get prime cost. Then factory expenses. Yeah, just give a breakup for this, guys. So total actually expenses 1 lakh. In that 45% is variable. So take as it is 45,000. Whereas remaining 55% is fixed cost 55,000. First, can I take it fully? No. So 55,000 divided by 40,000, guys. Normal capacity. Normal capacity. Yes. So fixed overhead absorption rate is how much? 1.375 per unit. So this is called fixed factory overhead absorption rate. So for each and every unit produced, how much it will be charged, guys? 1.375. So how many units we have produced and sold? 35,000. So multiply this with 35,000. So how much fixed overhead is absorbed, people? 48,125. Hope you guys are able to get it. In absorption costing, guys, listen here. They have clearly given the clue also in the question. It is based on the normal capacity. And please be careful, variable will always vary with the production. So whatever is the thing, we will assume that is for actual production and we will straight away take it. 45,000. Got it? Whereas fixed, while observing the fixed overheads, we will always follow fixed overhead absorption rate, which is predetermined. And to predetermine that, do we have the actual output at the beginning of the year? No, sir, we don't know. Actual output we will get to know only at the end of the period. Yes. So we will have the capacity. So divide the total fixed overheads by capacity. You will get fixed overhead absorption rate per unit. Okay. So here it is 1.375. So as and when we produce each and every unit, how much we would be charging? 1.375. So totally how many units we have produced? 35,000 units. So that means how much fixed factory overheads is observed? 48,125. Hope you got it. Hope you got it. Yes, sir. So total comes to 93,125. So there is an under absorption. There is an under absorption here. Yes, sir. So works cost is 6,43,125. For that, add administrative overhead, fully fixed. So 50,000, same way you follow. 50,000 divided by 40,000. So what is the overhead absorption rate? 1.25 rupees per unit. Multiply that with the actual output, 35,000. So we will get 43,750. Here also there is an under absorption. Okay. Yes, sir. Then we get cost of production. Then take selling and distribution overhead. And please be careful, this administrative overhead they have clearly given related to production activities. That is why we have taken it before cost of production. Got it? Yes, sir. Next, selling and distribution overhead. Total is 20,000. In that 65% is variable, 13,000. Take as it is. Then remaining 7,000 is fixed, guys. So 7,000 divided by 40,000, which is a normal capacity, we will get overhead absorption rate 0.175. So for each and every units we produce and sell, we charge 0.175. So how many units we have sold? Actually 35,000 units. So multiply, we will get 6,125. So total comes to 19,125. Here also there is an under absorption. Yes, sir. So we get cost of sales 7,06,000 and sales is given in the question 8 lakh. Profit would be the balancing figure. Profit would be the balancing figure. 1 second. Sales, yeah, sales is given in the question. Yes. So this would be the balancing figure. Yes, sir. So this is the profit as per cost books. So we'll try to reconcile this with the financial profit. So we are taking cost profit as we have done cost sheet. So we will take the profit as per cost accounts as a base, 94,000. There is one pure financial income. So pure financial income, assume guys this is financial records. So financial income would have been recorded here. Yes. Because of that financial profit has gone up. Yes. But have we recorded this in the cost books? No, we have not recorded in cost records. So because of this, my cost profit has not changed. But now if I have to match it with financial profit, what should I do? I need to add it to my cost profit. So add 10,000. Add 10,000. We will get 1,04,000. Okay. And totally there are three under absorption of overheads, guys. 1, 2, and 3. Find out. Find out that. And whenever there is an under absorption in cost records, guys. So profit would have gone up in cost books. Profit would have gone up. Correct. Huh? So instead of charging 1 lakh, we have charged, assume, only 93,125. So that means profit has gone up. Yes. So what should we do now? Deduct all this. All the under absorption has to be deducted, guys. So factory expenses undercharged in cost books is 6,875. That is 1 lakh minus 93,125. Same way administrative overhead under absorbed 50 minus 43,750, 6,250. Then selling and distribution overhead under absorbed also 20,000 minus 19,125. You will get 875. Add up all three and deduct it. So profit as per financial accounts, you will get 90,000, guys. 90,000. And if you want to cross check this, you can quickly do one calculation. Just a minute, I will show you. Yes. Yes. Observe, sales is 8 lakh, right? Yes. So let us do the total of the cost quickly. 3 lakh 50 plus 2 lakh, 5 lakh 50 plus 1 lakh, 6 lakh 50, 7 lakh, 720. Okay. So 8 lakh minus 720, all the expenses put together, we will get 80,000 plus one more financial income. So 90,000. How much is the financial profit, guys? 90,000. Hope you understood. I repeat, 8 lakh minus all the expenses plus this pure financial income. This will give us a financial profit of 90,000. Did we get at the end financial profit 90,000? Yes, that means we are right. Yes, we can just cross check like this. Yes, done with this. Question number 5, guys. A, sub question A. A machine shop has 6 identical drilling machines managed, okay, by 4 operators. The machine cannot be worked without an operator only engaged on it. Means, even though there are 6 machines, can we operate all the machines simultaneously? No. Why, sir? Because we have only 4 operators. So machine will operate only with the operators. Without operator, machine will not operate, guys. Yes. Okay. So the original cost of all these machines, not per machine, all this machine is 3 lakh, all 6 put together. These particulars are furnished pertaining to a period of 4 months. So the data given here is for 4 months. Normal available hours per month. Okay. The heading they told 4 months, but here they are telling per month. Okay. 156 hours. Whereas absenteeism without pay hours 9 hours, leave with pay hours 10 hours, normal idle time unavoidable hours 5 hours. For even for this it will be paid. But here there is no clarity with respect to, sir, whether this is per month or for 4 months. This three information. Guys, see, heading they gave the given data or the following particulars is for 4 months. Okay. If nothing is mentioned, it is understood that it will be for 4 months. Yes. But only this one, they clearly mentioned per month. So you need to consider this as per month, whereas this three, you need to take it for 4 months. Hope you understood. Because here and all, they didn't mention per month. So it is understood that for the following three, it is 4 months. So this hours are for 4 months, whereas this alone is per month. Got it? Yes. Okay. Average rate of wages per worker for a 6 hours day. Okay. This is like 450 per day. So if I want to calculate per hour, 450 divided by 6, you will get per hour. Next, production bonus estimated 20% on wages. Value of power consumed 20,500. Supervision and indirect labor 8,500. Lighting and electricity 4,500. Okay, sir. This particulars are furnished for a year. Okay. So following data is for a year. Okay. Sir, what about this? This data. Is it per month, per year, or 4 months? Guys, please consider them as for 4 months. Because heading is mentioned as 4 months. But here they told per day, per month and all. For this alone, you go with that numbers or period for whichever they have given here. Whereas others are considered to be for 4 months. Please be careful with this. If not, you will go wrong in your calculations. Yeah. So the following particulars is for a year, guys. Repairs and maintenance, including consumables, 2% per annum of the value of the machine. So 3 lakh into 2%. Depreciation 15% per annum of original cost. That is 3 lakh into 15%. Other sundry work expenses 12 lakh per annum. General management expenses allocated 24,000 per annum. The machine shop has taken an annual insurance for all the 6 machines also. Okay. Given that the comprehensive machine hour rate for 4 months period is 125 rupees per machine hour. Okay, answer is already given. Sir, then what are we supposed to calculate? Guys, how do we get machine hour rate? Total cost divided by machine hours or productive machine hours. So we will get machine hour rate, which is already given in the question. What are we supposed to calculate then? You're required to find out the total amount of annual insurance premium. Okay, they're asking annual. Please be careful. Annual insurance premium. Fine, sir. Chalo, we'll go to the solution. Interesting question. Operator wages, we need to do the working for it. We need to calculate the hours and all. Yeah. Normal available hours, guys, is 156 per month. Per month. So we need to multiply that with 4 months, and that is per operator. So multiply. Totally, how many operators are there? 4 operators. Okay. So total available hours for 4 operators in 4 months period is 2429. 2496. 2496. Hope you understood. Please be careful. Total available hours in a month is 156. So this is available for each operator? Yes, sir. So multiply with 4 operators. Then it is per month. We are doing the calculation for 4 months. So 2496 we will get. Whereas remaining 3 information is given for straight away 4 months, guys. So 9 absenteeism hours. 9 is per operator for 4 months. Multiply that with 4 operators. 36. Then leave hours 10 into 4. 40, and idle time hours 5 into 4, 20 you will get. Sir, for this hours, will the payment be made? Yes, but only for absenteeism there is no payment. So if I have to calculate paid hours, we need to take total available hours minus 36. So this is the hours for which payment is made, 2460 hours. Whereas for 40 and 20 payment is made, but there is no productivity. So if I have to calculate what is the productive hours, it is 2400, guys. 2400. Actually, this is labor hours calculation, but it will be the same as machine hours. Why, sir? Because machine cannot operate without labor. That is without operator. So whatever is the labor hours is equal to machine hours. Because the machine cannot operate without operator, guys. Okay. As machines cannot be worked without an operator wholly engaged on them, therefore, hours for which 4 operators are available for 4 months are the hours for which machines can be used. Hence, 2400 hours represent effective machine hours, guys, or productive machine hours. Got it? Yes, sir. Now, 450 rupees is the pay per day for the workers who will work for 6 hours. So, per hour, how much? 75 rupees. So, can we calculate total wages now? Yes. So, we have got paid hours 2460 into hourly pay 75 rupees. Multiply both. You will get 1,84,500. 1,84,500, guys. Got it? Yes. I will just go back and explain this part once again because I feel somewhere that students might get doubt only in this part. Guys, please be careful. Normal available hours per month. This is 156 hours per month. This is per operator or all 4 operators put together. Guys, this is available hours per month. That means each operator can work for this many hours in a month. Yes, sir. Whereas whatever they have given here also is per operator, but for 4 months. Because if they had mentioned per month here, we would have taken per month. But did they mention? No. So when they are not given the period year, it is understood that whatever is mentioned in the top is applicable, guys. 4 months. So hope you understood. This is for 4 months per operator. Whereas this is per month per operator. Got it? Yes. Okay, we'll continue. So whatever we just now calculated, 1,84,500, take it here. Production bonus is 20% of this, which comes to 36,900. Then power consumed is given straight away for 4 months. Supervision and indirect labor, lighting and electricity. Guys, this 3 information is already given for 4 months. Take it straight away. Okay, sir. Repairs and maintenance. Repairs and maintenance, I guess it is given for a year. Okay, but we are doing the calculation for 4 months. So check 12 by 4. How much you will get? 3. Okay, so divide all this cost by 3, guys. 1 by 3 they have taken, which is nothing but totally 12 months in a year. But we are doing the calculation for 4 months. So we will get 3. You can do 1 by 3. Yes. Repairs and maintenance is 2% of the cost of the machine. That is 3 lakh into 2% per annum you will get divided by 3, 2000. Same way depreciation is 15% of the cost per annum divided by 3, you will get 15,000. Or else instead of doing this, you can also do like this. 4 by 12. 4 by 12. Year also 4 by 12. Year also 4 by 12. Because per annum is totally 12 months, but we are doing the calculation for 4 months, guys. Okay. Other sundry works expenses 12,000 into 1 by 3. Okay, 4,000. Yes. General management expenses also is given per annum. So 24,000 into 1 by 3, 8,000. Okay, sir. This we are supposed to calculate. So we are calculating total overhead other than insurance premium. That is excluding that. 2,83,900 we will get it. Okay, sir. Insurance premium we don't know, but even that is a part of cost. But let us try to calculate what is the total cost. So we know how to calculate machine hour rate. Total cost divided by total productive machine hours. So we already have machine hours, productive machine hours, 2,400, and 125 is the machine hour rate given in the question itself. So multiply both. You will get what is the total cost. You will get what is the total overhead cost. Yes, sir, 3 lakh. So this is the cost excluding insurance premium, but total cost is 3 lakh. So the difference between this is what, guys? Insurance. But insurance for 4 months. Please be careful. All these calculations, all these numbers are for 4 months. 4 months. Better write it in the 18. 4 months. Okay, now? Yes, sir. So this was the total overhead excluding annual premium. Sorry, excluding insurance premium. Yes. This is the total overhead cost including everything. So the difference between this would be the insurance premium for 4 months. For 4 months. But don't stop here, guys. I know if student has attended January exam, few of them would have stopped the calculation year itself. But what they have asked is annual insurance premium. Please be very careful, guys. So do into 3. Or else you can do like this. Divided by 4 into 12. 16,000 divided by 4 into 12. You will get 48,300. Hope you got it. Yes, guys. So this is like interesting question. But if you know how to calculate machine hour rate and all, it will be easy. Fine, guys. Done with this. So please be careful. One thing you have to take care is here these are given for 4 months, whereas the following are given per year. I will just show you that also. So you can see here the heading is 4 months. So all these are for 4 months period. Whereas here the heading is for a year. So whatever is given here is per annum, guys. But convert all that for 4 months. That is for equivalent period. Yeah. Let us move to sub question B. Following data is available for XYZ Limited for the month of March 2025. Standard working hours 7 hours per day of 5 days per week. Okay. So per week how much? 7 into 5. Number of weeks in a month 4 weeks. So 7 into 5 into 4 we will get the number of hours in a month. Maximum capacity number of employees is 60. Okay. So if I have to calculate what is the maximum number of hours for which the workers can work or the factory can operate is 7 into 5 into 4 into maximum number of employees, guys. That is 60. Okay. This is the maximum possible hours. Okay. But actual number of workers are 42 employees. Actual working. Okay. Actual capacity usage ratio 65%. Activity ratio 125%. Okay. What are they asking? Calculate the following. Actual hours worked, standard hours for actual output, standard capacity usage ratio, actual usage of budgeted capacity ratio. Okay, sir. Fine. So hope you guys remember all these ratios calculations. Yeah. Be easier. I will just show you in my concept book. So in the budget chapter, we have discussed all this ratio calculation. The last part, budget ratio. Okay, so the question is with respect to this. Yes, chalo, we'll see. First, we are supposed to calculate actual hours worked. So they have given actual capacity usage ratio, guys. What is the formula for it? Actual hours worked divided by maximum possible hours into 100. Maximum possible hours can we calculate? Yes, with the given information we can calculate. So maximum number of workers is 60 into 7 hours into 5 days, 4 weeks. So 8,400. Okay, sir. So 8,400 we have got denominator. Then we have got actual capacity usage ratio which is given in the question 65%. Multiply both, guys. 8,400 into 65%. So you'll get 5,460 which is actual hours worked. And see in the formula you would have written into 100 here. But if you have taken percentage here, straight away multiply 8,400 into 65%. Don't again multiply with 100. Don't take it into 100 or don't do it again. Or don't divide it by 100. Okay, na? Yes. So if you are multiplying with percentage, straight away stop there, guys. Is that clear? But to show the formula, can I show into 100, sir? Yeah. Yes. You can show it. Okay, fine. So actual hours worked is 5,460. Then standard hours for actual output is asked. So just see in which formula do you use it? In activity ratio formula. What is the formula to calculate activity ratio? Standard hours divided by budget hours into 100. Into 100. Yes, sir. It is given as 125%. Standard hours we need to calculate divided by budgeted hours into 100. So budgeted hours we can do it. How is it, sir? Actual workers you calculate 42 workers. They can work for maximum how many hours? 7 hours into 5 days into 4 weeks. Clear? Please be careful, guys. To calculate maximum possible hours, we will take the maximum workers. 1 second. I will just show you. Yes, sir. So you need to consider what year C. This is C. One more sub question is there, which we'll see later. Yeah, maximum number of employees 60. So we're calculating maximum number of hours. We need to take this many number of employees. Whereas to calculate budgeted hours, we need to take actual workers, guys. That is 42 employees. Got it? Yes, sir. Just a minute. Yeah. So we'll get budgeted hours 5,880. Okay, sir. So we know this, we know this. Multiply both. 5,880 into 125% will give us 7,350 hours, guys. So that is standard hours. Next, standard capacity usage ratio. So maximum possible hours is 8,400. But we have set a budget for how many hours? 5,880, guys. So budgeted divided by maximum. So we have set a budget for how much of maximum capacity? 70%. 70%. Got it? Yes, sir. Means this is the maximum capacity we have. But can we plan and work as per that? May not be. That much is not required also sometimes. Yes, sir. So budget plan is prepared for how many hours? It is for 5,880 hours. Got it? Yes. So we have planned or budgeted for 70% of our capacity. But how much of that we are actually using? Actual working hours divided by budgeted hours into 100 will give us actual usage of budgeted capacity ratio. So here the name of the ratio itself will help you to derive the formula. Actual divided by budgeted, guys. Got it? Yes, sir. So 5,460 divided by 5,500 sorry 5,880 hours into 100 will give us 892.86 percentage. Okay, that means whatever we have planned for, we have achieved 92.86% of that. Actually, we have worked for 92.86 percentage of what we have planned. Planned is nothing but budgeted. Got it? Yes, sir. Fine, guys. So all these calculations were as per this ratios, guys. And please try to remember all these formulas, guys. If not, you will not be able to do the calculations. Yeah. Sub question C for 3 marks. A company can make any one of the two products M or S during the year. It can exercise its option only at the beginning of the each year. Relevant information about the products for the next year is given below. Selling price per unit is given. Variable cost per unit is given. So if I deduct, we will get contribution per unit. Market demand in units. Production capacity in units. Fixed cost is 1,25,000. 1,20,000. Whether you go with M or S, fixed cost would be 1,20,000. You are required to compute the opportunity cost for each of the product. Very easy question, guys. Yes, obvious. That is why it is asked only for 3 marks. Yes. So, what is the number of units we can produce? 3,000 or 4,000, whichever is lower, guys. Correct. Now we cannot produce whichever is higher. Demand or production capacity, whichever is lower. So here it is 3,000 and here it is 7,000. So multiply that with contribution per unit. How do we get contribution per unit? Selling price minus variable cost. Yes, sir. Sure. We will see the calculation. Yes, contribution per unit is nothing but selling price minus variable cost per unit. You will get 30 and 15 rupees. Then units, how many units can we actually produce and sell is lower of production or production capacity or market demand. So 3000, 7000 we need to do. So multiply both 30 into 3000, 90,000, 15 into 7,000, 1,05,000. So if I go with product M, what is the opportunity cost, guys? So the total contribution of S, which is 1,05,000. If I go with product S, I will get 1,05,000. But what will I lose? What is the opportunity cost? Contribution of product M, which is 90,000. Clear? It is also mentioned here. What is opportunity cost? Opportunity cost is the maximum possible contribution foregone by not producing alternate product. That is, if product M is produced, we will get 90,000. But what do we lose? Contribution from product S, which is 1,05,000. Same way, if I go with product S, I will get 1,05,000 contribution. But what do I lose? Is 90,000. So we need to write here. I cannot produce both, any one. So if I go with M, I will lose 1,05,000. If I go with S, I will lose 90. Is that clear? Yes, guys. Okay, done with question number 5. Next, question number 6 is completely theoretical. Classify the following items of expenses by functions and variability. Okay. We'll just straight away go to the question solution. I will explain there itself. Consumable stores, guys. So by function, where it will come under factory overheads. Factory overhead is also called as production or manufacturing overhead. Any one you can write. You need not write all three in the exam. And it will be variable in nature because it will vary with number of units produced. Got it? Yes, sir. Then general management salary, normally it will be fixed and it will come under administrative overhead. Yes, sir. General administrative overhead. Yes. Next, you can also use the word general administrative overhead. Next, delivery van expenses. Guys, delivery of what? Output, finished goods. So it will come under selling and distribution overhead. So delivery van expenses, guys, see, it can be variable or semi-variable. Variable means, sir, if it depends on each and every unit delivered, then it will be variable. Or else, sir, in a van, we can fit in, assume 1000 kgs. Over and above 1000 kgs, we need one more van. So in that case, can I call it as semi-variable? Yes. Got it? It can be either variable or semi-variable. If I am delivering each and every unit separately, then we can call it as variable. If not, sir, in a van, we can fit in 1000 kgs or 500 kgs. So up to 1000 or 500, cost is fixed. Over and above that, we need to take another van. Yes. So that will increase our cost. It is like that. Next. Compensation, fixed salary plus commission on sales. Okay, here itself they have given the clue. So it is semi-variable. And commission on sales, there only you should understand that it is a part of selling and distribution overhead. Got it? Yes, sir. Because if they just give salary, we don't know salary is paid for whom. But later they told plus commission on sales. Okay, sure. Next, rent of finished goods warehouse. So it is a part of selling and distribution overhead because once the product is produced, to make it available to the customer, any cost we incur is selling and distribution. So even for storage of finished goods, if I incur any cost or rent or warehouse charges, that will be a part of selling and distribution overhead, guys. Okay. And it will be fixed because rent what we pay is based on per month, guys. Okay. Sure. A is done. B is interesting question, guys. Actually theory, but you cannot answer it as theory. You need to do some analysis through an example. I will explain. Understand. Focus here. Suggest a suitable incentive scheme to a factory for its workers, keeping in view the following. Oh, the entire gains of improved production should not go to the workers. So you can either use ALSA or Rowan because under both, for whatever time saved, will we give it full pay to the time saved as bonus? No. Under ALSA, it is only 50% of the time saved will be given as bonus. Whereas under Rowan, we need to use the formula. What is it, sir? Time saved divided by time allowed into time taken into time rate. So for the entire time saved, bonus will not be paid fully. It will be shared between the workers and the company, guys. Got it? Yes. In the name of speed, quality should not suffer. Okay. Because now, if the workers want to get more bonus, they will speed up and they will try to complete the work as early as possible by compromising with the quality. Okay. That should not happen, it seems. Okay. The last one. The rate setting department being newly established are liable to commit mistake. And here rate in the sense, not the amount, guys, that is time allowed. Whoever is setting the time, no, if there is any mistake from their side, it should not affect the company in in a large extent or significantly. Got it? They can commit mistake, what is what they're telling. So even if they commit mistake, that should not impact the company in a bigger way. Okay, sir. Fine. So what is the solution, sir? Rowan scheme. So what is the formula to calculate bonus under Rowan scheme, guys? Time saved divided by time allowed into time taken into time rate. Correct? Yes. Let me assume, I will explain with an example. Time rate, we will assume it as 1. Ah. Rowan scheme of premium bonus variable sharing plan is suitable incentive scheme for the workers of the factory. If this scheme is adopted, the entire gain due to the time saved by the worker will not pass to him. It will be shared between the employer and employee. Yes, but this is not the only reason. We have two more. What is it, sir? What if the workers speed up the work in order to save the time and earn more bonus? What if quality is compromised? So we need to check it. So if I am following Rowan scheme, let us see. Assume time allowed is 10 hours. Time taken, I am just taking three possibilities, 3, 5 and 7. So time saved will be 7, 5 and 3. Hope you're understanding. This I have taken three different possibilities. Okay. So what would be the bonus under each of this? Use the following formula. And time rate, I'm just taking 1 rupees to keep it very simple. Okay. So in this case, I will tell you. In this case, how to calculate bonus. Time saved, that is 7 divided by 10 into time taken, which is 3 into time rate 1, guys, which will give us 2.1. And if time taken is 5, the bonus would be 2.5. You can just calculate. If you want, you can just pause the video and try to calculate it. Okay. Then the bonus here would be 2.1. So you can see, even if the savings is 7 hours, we get 2.1 rupees as bonus. But even if I save only 3 hours also, I get same. So actually under Rowan scheme, when the bonus will be maximum is when time taken is 50% of time allowed, guys. 50% of time allowed. Or else, I can tell like this. The bonus under Rowan scheme will be maximum when time saved is equal to time taken. Got it? And if you try to complete that job still faster by compromising with the quality, even if you save more, will you get bonus more? No, you will get only 2.1. Got it? Yes. So will this encourage the workers to complete the work as early as possible, crossing the time limits and all? No, guys. Because if they save too much of time, then they will not get the highest bonus. Is that clear? So the explanation is here. Another feature of this scheme is that worker cannot increase his earnings or bonus by merely increasing its work speed. The reason for this is that the bonus under Rowan scheme is maximum when the time taken by the worker on a job is half of the time allowed, or time taken is equal to time saved. As this fact is known to the workers, therefore they work at such a speed which helps them to maintain the quality of the output too. Okay, so as they know that when we take the 50% of the time allowed, we will get maximum bonus. Will they increase their speed beyond that? No. If they try to increase the speed beyond that, definitely they will not get more bonus, but the quality of the product might come down. Got it? Yes, sir. So they will try to manage maybe at this level, guys, under Rowan scheme. Okay. Last part was what? Sir, what if there is any mistake in rate fixation? Lastly, Rowan system provides a safeguard in case of any loose fixation of standards by the rate setting department, that is time allowed. Okay. Workers cannot take undue advantage of such a situation. How is it? I will just try to explain with an example. Guys, because this theory and all, you cannot answer straight away. You need to do some analysis. Yes. Okay. Guys, assume time allowed was supposed to be 10 hours, but by mistake, the rate setting department has set it as 15 hours. 15 hours. Okay. Let us assume the time taken is 5 hours. So time saved is how much? 10 hours. So we are following Rowan scheme and Alsay scheme. So under Rowan scheme, if time saved is 10 hours, what is the bonus? What is the bonus? So we need to calculate 10 divided by 15 into 5 into time rate 1 rupees. We will get 3.33. 3.33. So just check it here. If time taken here is 5 hours, but if time allowed was 10, the bonus would have been 2.5, but here it is 3.33. That means it has increased. It has increased. Yes. Will it cause a loss to the company? Yes. Because of a mistake in setting the standard, the company will suffer a loss because they will end up paying more bonus. Okay. This is under Rowan scheme. Now let us come to Alsace plan. Alsace plan also time saved is 10. Yes. 50% of the time saved will be paid as bonus. Yes, sir. So 10 into 1 into 50%. 1 is the hourly rate. Okay. Yes. How much is that? 5 rupees. So compare now, guys. If there is any mistake in setting the time allowed, under which scheme the company will end up paying more bonus? Under ALSI. Here it is 3.33. Definitely it is more than 2.5. But here you observe 5 rupees. So when compared to this, where the company is actually saving under Rowan scheme. If the company follow ALSI plan, because of the mistake in setting the time allowed, they will end up paying more bonus. It is loss for a company. It is loss for a company. Got it? But even under Rowan scheme also there will be a loss. Because if they had set 10 hours, they would have paid only 2.5 rupees as a bonus. But here they are paying 3.33. But when compared to ALSE, the loss under Rowan scheme will be less, guys. Is that clear? Because there is a gap between both of this. No, that is. So because of these reasons, what is the ultimate conclusion, guys? Which scheme is better for a company? Rowan scheme, considering all those three factors. Got it? Yes, sir. Okay. Next one. Discuss the usefulness or suitability of activity-based costing for 4 marks. There is an internal choice here, C and D. Okay, C, that is C, not this. Let us not name it as D. So you can either answer this or this. Discuss the usefulness or suitability of activity-based costing. Okay, let me just show you in my concept book. What are you supposed to write? So you can just come to activity-based costing chapter. I will show you what you are supposed to write. Yeah, this part, guys. So in page number 61, you are supposed to write this 1, 2, 3, 4, 5. I would have already explained all this in the class, so I'm not explaining it again here. Then the last one, that is the internal choice. Discuss the 4 components of budgetary control system. Okay, 4 components of budgetary control system. That is the last chapter. Last chapter, budgetary control system. Yes. Yeah. This one, guys. You are supposed to write this. You're supposed to write these 4 points. That's all. So this is what they would have suggested in the answer. Yeah. High amount of, when there is high amount of overhead, then activity based costing is better than traditional system. Wide range of product, that is when there is a multiple products. Then presence of non-value adding activities. If there is any non-value adding activities on which we are incurring any cost, we can try to eliminate that by following the activity based costing. Then stiff computation. When there is a stiff computation, it is very important for us to calculate the accurate cost, and activity based costing will help us to calculate the accurate cost when compared to the traditional overhead system, guys. Then the last one, functional budgets. You need to just explain. This is very simple. Yes. And I would suggest, guys, students, please don't take last question as a choice. I know some of the students will feel costing means only numerical paper. I don't like to write theory and all. But in the last question, the advantage is you have an internal choice. You have an internal choice, guys. So please don't lose out on that. So I will suggest the students to take any other questions. This is the 6th question, right? 6th question would be completely theory. So try to take between 2 to 5, any one question as choice. This is just my suggestion. But in the exam, if you felt that, no, sir, theory questions I'm not able to answer, I don't know the answer for it, maybe that you will take it as a choice. If not, try to answer the theory question and take any other question as a choice, especially the question where you feel that you will consume more time, guys. Better take that kind of questions as a choice. Yes, guys. So this is all about Jan 2026 question paper.